We come into the new year prepared for some volatility.
Maybe it's time to rebalance a bit.
We're already seeing some rotation.
What the market doesn't understand is the president's willingness to take risk.
If we get more macro risk like this, it's going to be hard to keep risk priced where it is.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday within 1% of record highs. Global equity markets shaking off heightened geopolitical risk as Samsung and TSMC are powering a big rally in Asian stocks. The Nvidia boss is talking up demand for a new generation of chips. Vera Rubin is in full production.
Well, the whole band is back together. Welcome back, John. You know, honestly, to me, was there a signal with the alligator skin suit coming out to the stage? It wasn't just the regular leather jacket. It was the alligator jacket that we got from Jensen Huang. To understand what Vera Rubin was requires some sort of astrophysics in terms of 88 cores and exactly what it does. But the fact that it will be unleashed at the end of 2026 really highlights how much they're expediting their schedule to try to continue with the dominance over the field.
I won't bother trying to explain the technical details. I'll just point to the price action. The stock is higher in the pre-market by 0.6%, but the fireworks are elsewhere. They're in Asia. Look at Taiwan Semi. Look at Samsung Electronics since the start of the year. The Kospi, another all-time high.
Yeah, this feeling that really the innovation is coming from there with consumer products in particular. And Samsung, interestingly, using Google's Gemini in particular with some of its artificial intelligence. The sort of wars are establishing who is going to be the potential winner and what the next node of artificial intelligence in the way we consume it really will look like.
It really is a tech story that's insulating the equity market worldwide from the story we talked about all weekend, which is the heightened geopolitical risk and the mess that's emerging over in Venezuela.
That's right. And we do see right now Venezuela is in this period of transition. Yesterday, Maduro's former VP is now running the country, Delcy Rodriguez. And you're hearing that from the business community and basically from the administration, they view this as someone who is pragmatic that they can work with. Interesting comments yesterday from the president that matter to the business community has to do with the oil sector. He thinks it can take less than 18 months. Now, I haven't spoken to anyone in this industry who thinks it could be that quickly to get Venezuela out to the productions they had in the 90s of north of 3 million barrels a day.
If you break it, you own it. They own it now. It was already broken. There's a lot of fixing to do in that country.
Well, and there's a real lack of understanding of what exactly it will take. There was a 2-hour briefing yesterday with members from the House and Senate in Capitol Hill. We don't have a clear sense of the answers to that. So now the question is, how closely is the United States working with the vice president, now the president, Delcy Rodriguez? And what's the ultimate goal? What does it mean to run a country when you don't have troops on the ground?
Well, speaking of goals, let's talk about the agenda. And not the agenda down in Venezuela, the agenda down in Washington, D.C. The goals of this Republican Party going into the midterms as we shift towards affordability.
Absolutely. Today at 10 a.m., the president will be having this retreat. He'll be greeting House Republicans. And you'd think today was going to be about what you just discussed, affordability, going into a huge election year, midterm elections this November. But first, there's a lot of questions, Republicans, whether they're saying it out in the open or behind the scenes, about what is taking place in Venezuela. They do want to know whether or not this president is serious about potentially at some point putting boots on the ground.
If you are just tuning in, welcome to the program. The price action pretty muted so far this morning. Equities going nowhere on the S&P 500 to slightly negative. We're down about 0.03%. Coming up this hour, we'll catch up with Julian Emanuel of Evercore RSI as stocks look for a third day of gains. Sonal Desai of Franklin Templeton fixed income on the risk of stagflation, and frankly of HSBC as Nvidia rolls out its next generation of AI chips. We begin this hour with stocks within 1% of all-time highs. Julian Emanuel of Evercore setting a 77.50 price target for the S&P by year-end, expecting more of everything that drove 25, more AI, more stimulus, more earnings growth, more volatility. Julian joins us now for more. Julian, good morning.
Good morning.
Good to see you, sir. Welcome to the program. Everything that worked last year is going to keep on working. The temptation to choose something new, find that new thing. Why aren't you embracing it?
So the issue here is, and again, this concept of concentration risk. If you go back to the beginning of this century, when the top 10 stocks were 25% of the weight in the S&P 500, there was a thought that could not be exceeded. We're now at 40%. And frankly, again, if you think about concentration risk, you look at a market like Korea, where in the Kospi, you've got two stocks that account for 45%. So the point is the math doesn't work for these stocks not to market perform or outperform. But the truth is that the capital market cycle has yet to fully play out, and the beneficiary of a robust capital market cycle, time and time again, are the stocks that led you into the cycle.
So for anyone that comes on a program later on this morning saying dive into what's happening in Asia, what's developing in South Korea, you're saying take a step back, resist?
No, we're basically what we're saying is that, there should be a discomfort around the fact that the market is really clustering in this theme, but that discomfort, as we saw earlier at the end of last year, with the discomfort around the one marquee name that has taken on a great deal of debt to finance CapEx, the majority of these companies have, very, very robust cash flow. And so therefore, you're going to have this sort of virtuous cycle of earnings continue to be driven by these names.
Is the bet right now just to bet on the biggest tech companies in both regions, both the U.S. and China, betting that they can consolidate their dominance going forward, regardless of whether the U.S. or China wins?
It does come down to that to a great degree. And we get asked all the time, again, should we rotate to other sectors? We think there'll be plenty of opportunity to do it opportunistically. There's going to be a continued skirmish around healthcare towards the end of this month, obviously. In fact, with the one big beautiful bill, tax benefits starting to kick in later this quarter, we think there's an opportunity for consumers, beaten down consumer names to rally. But you step away, and the bull market has been led by these names and these themes, and we think it just has further to run.
There might be some people who read what's going on in the news and then look at markets and say that everybody's just going, la, 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 la. We're not going to listen to anything that could potentially be game-changing. Is it just bet on what you know, and that when you don't know so much, you just ignore it?
Well, I think, again, part of the rationale around AI is you're still betting on something that you don't fully know, okay? And for us, what we think is going to happen in 2026 is you're going to go from the inflection year, 2025 for AI adoption, to the year where it accelerates when corporate, global corporates realize that if they don't find ways to drive revenues and cut costs through using AI, they will be at a competitive disadvantage.
When Lisa says things going on in the news, she means Venezuela. And you actually write in your note that you think, if anything, Venezuela increases the chances of an AI bubble. Why is that?
So think about a confluence of events. First of all, we found out a week and a half ago that the economy's last reading was actually stronger than expected. Thinking about the stimulus that's ahead, it sets up more economic upside in the U.S. In fact, our team just took its 2026 forecast up to 2.5%. From a Fed perspective, we actually think there won't be 2 cuts. There'll be 3, possibly more.
How do you have both? Growing economy, fiscal stimulus, potentially higher inflation, and then you're saying 3 Federal Reserve cuts?
Because you have a political backdrop where the impetus is to keep the consumer moving forward as we get to the midterm elections. Now, on Venezuela, basically the issue here is long term, it's likely a moderating influence for oil prices. And if you think about oil prices staying, flat for longer, that's bullish for long-dated bonds.
Let's park Venezuela just for a moment. Your view on the Federal Reserve becoming increasingly politicized. In the last 24 hours, we've had a series of guests come on the program and talked about the unintended consequences of pushing for lower interest rates at the Federal Reserve, galvanizing the other members of the committee to push back against the push for lower interest rates. Why are you taking the other side of that?
Essentially because a couple things is that for the most part, even though the economy is strong, there's still this dichotomy between what the labor market actually looks like. Obviously, a lot of that has to do with immigration policy, et cetera. But the fact of the matter is that politically and sort of psychologically, to see monthly job gains closer to 0 than closer to 100,000 going forward will be something that, given the fact, and we also think that the tariff flow through has reasonably fully flowed through. And so, a moderate jobs environment and a lower inflation trajectory just continue to drive the ability to cut rates.
Let's finish by pushing that through the equity market, consumer discretionary. Does it turn things around?
We do think so. And again, our sector preferences, consumer discretionary, communication services, infotech, the subtext is all of them have large exposure to AI, but in this algorithmic trading world, what's good for the consumer is going to flow through and be good for AI names and, boost that sector.
Julian, we hope you're right. You're going to be sticking with us. Julian Emanuel there of Evercore. I would say controversial call on this Federal Reserve. A lot of conflict there, some tension on the committee already about the push for lower interest rates, and some on the committee, I imagine, who feel like they need to defend the independence of the institution.
You've seen right now inflation run above 2% for more than 5 years. You have an increasing number of Fed members who come out and said, we are increasingly concerned about price stability and the tax that this is on particularly lower income Americans. Definitely a question around that, and definitely a question about how sanguine the reaction would be in markets if this was a truly politicized Fed that would push front-end rates lower, even at the expense of long-term inflation.
Eddie Ardeni made the point yesterday that actually Trump's pressure on potentially whoever's going to be the next Federal Reserve chair is actually going to make the other committee members galvanize to speak out against that Fed chair, which in the end potentially will make a more independent Federal Reserve.
And we still don't know who that next Fed chair is actually going to be because we're still waiting. This morning, at least, bond yields are higher by, let's call it 2 basis points. The 10-year at 4.1868. Let's get you an update on stories worldwide this morning with your Bloomberg brief. Let's cross over to Yahara Arnott for more. Hey, Yahara.
Good morning, John. Delcy Rodriguez is officially the acting president of Venezuela. Speaking after being sworn in, Rodriguez telling the National Assembly she did so with pain because of the suffering caused by, quote, illegitimate military aggression. Rodriguez vowing to guarantee the peace, economic, and social tranquility of the people of Venezuela. Meanwhile, President Donald Trump says he wants U.S. oil companies to play a key role in rebuilding Venezuela. The president saying oil majors could be up and running in the country in less than 18 months, and the U.S. government could subsidize their efforts. Sources telling us here at Bloomberg that Energy Secretary Chris Wright plans to speak with oil executives in Miami this week. And NVIDIA CEO Jensen Huang announcing new AI models and tools designed to speed up the development of autonomous vehicles. The company is aiming to create vehicles that can think their way out of unexpected situations, such as a traffic light outage. Tune in to Bloomberg Tech at 1 p.m. Eastern for interviews with the CEOs of NVIDIA and Siemens. That's your Bloomberg Brief. John?
Yahara, thank you. Looking forward to that. Catching up with Ed Ludlow a little bit later this morning. Up next on the program, taking control of Venezuela.
What the president said is true. The United States of America is running Venezuela. We live in a world, in the real world, that is governed by strength, that is governed by force, that is governed by power.
A conversation up next with Bloomberg's Laura Davidson, live from New York City this morning. Good morning. Within 0.5% of all-time highs on the S&P 500, just about unchanged so far this morning. On the Nasdaq, positive by, let's call it 0.1%. A lot of bullishness out there. We remain aggressively risk-on. That came from Max Kettner of HSBC. Here's one from Mike Wilson of Morgan Stanley Brammer. The surprise for 26 could be that we see multiple expansion for the median stock, in addition to strong earnings.
People are betting on fiscal stimulus, they're betting also on monetary stimulus, and they're betting on the AI explosion continuing. A question of how much you can ignore the macro and continue to bet on these micro stories with the overlay of the promise of government support.
So much of this conversation is insulating this equity market from this. Under surveillance this morning, taking control of Venezuela.
What the president said is true. The United States of America is running Venezuela. We set the terms and conditions. We have a complete embargo on all of their oil and their ability to do commerce. So for them to do commerce, they need our permission. For them to be able to run an economy, they need our permission. So the United States is in charge.
So here's the latest this morning. President Donald Trump insisting the U.S. is not at war with Venezuela as the country swears in a new government. Trump telling NBC News the U.S. may subsidize oil companies' efforts to rebuild Venezuela's infrastructure in a project that could take 18 months. Bloomberg's Laura Davison joins us now from Washington with more. Laura, I don't think it's hyperbole for me to ask you who's next, because listening to Stephen Miller in his conversation with CNN, there's a real sense that there might be another nation in the mind of the president.
Yes, this plan really, in terms of what happens next with Venezuela, is really in the minds of the president and his top White House officials, and doesn't really seem to have buy-in yet from both the Venezuelan people, Delcy Rodriguez in Venezuela, as well as the oil companies, which Trump keeps talking about as being a key part of this plan. That U.S. companies, Exxon, Chevron, ConocoPhillips, will go into the country, invest billions of dollars to get the country's infrastructure rebuilt, which has really fallen into disrepair in several years. But we've really not heard much at all from the oil companies. They have not, said that they are on board with this plan. We've heard that Chris Wright, the energy secretary, says he's going to talk with them this week. But it seems like the administration moved far faster than any other party in this whole operation.
There is a lot of rot and corruption in that country, Laura. That doesn't change with Maduro's exit. How different is the new boss to the old boss?
That really remains to be seen. Delcy Rodriguez has been a longtime acolyte of Maduro. She has been very loyal to him throughout the years, though she is much more of a technocrat than an ideologue. So it's possible, and we've started to see signs of that, and really in just the past 24, 36 hours, that she is willing to work with the U.S. administration. She put out, sort of a proposal for a cooperative arrangement here, and it's possible that we could see a partnership going forward, but this is all very tenuous at the moment.
Laura Davison down in Washington, D.C. Laura, thank you. Annmarie, we've talked a little bit about this. The absence of resistance over the weekend does not mean that you might not see that resistance in the weeks and months to come.
No, and even last night, there actually was a lot of gunfire outside the palace yesterday, and there was concerns and rumors on the ground of this potential coup. But when it comes to Delcy Rodriguez, to Laura's point, this is someone who over the weekend was very defiant, calling what happened barbaric, and then quickly put out an olive branch. And for the oil sector, they think this is someone potentially they could work with. She has been the country's energy minister. She has showed up to OPEC meetings. She knows this industry, and clearly this administration thinks at the minimum this is someone that's pragmatic. It's what Robert said yesterday when it comes to regime change, not big R, little r.
Well, let's focus on the energy infrastructure and the energy sector. That's a pretty aggressive timeline, 18 months based on what we've heard elsewhere.
Yeah, it's a pretty aggressive timeline and a pretty aggressive pledge that potentially the U.S. government could back some of these oil companies and give them the money to do some of these projects. A lot of questions still swirling. Also a question about how on board oil companies are with this. Unclear how much they've talked with them. Chevron saying that they had no advance knowledge of this whatsoever. So a lot of questions still remaining, including U.S. companies that still are owed billions of dollars for the assets that were taken back to when the entire industry was nationalized a couple of decades ago.
Maybe they weren't given explicit knowledge of what was going to happen, but the Wall Street Journal does say that Trump basically said to them something is coming, and you have seen the buildup. And on page 15 of their national security document, it said exactly what they want to do in this hemisphere. But to your point, the oil companies that potentially may not want to go in, the ExxonMobil, ConocoPhillips, got absolutely burned, and they have not got their money back from when they were kicked out of the country. So they need to know that the U.S. government is going to be behind them if they decide to take this venture.
The key here is crude. WTI at 58.49, Brent crude at 61.99. We've got Julian Emanuel of Evercore still with us. Julian, you talked about the importance of $60 crude. Just flesh that out for us. Why is it so important to the stock market?
Well, it's the stability of the price. And look, I think one of the things that Trump has been very happy that he's been able to deliver going back to this first year is that visibly, in terms of the affordability crisis, there is not an affordability crisis at the pump anymore. Gas prices have continued to fall, and what we've seen is that has a tendency to bleed through to other areas. It has not yet, and it may not. I mean, if you think about what happened in the commodity markets yesterday, the surge in copper was anticipatory for this build-out that we're going to have in Venezuela. But the fact is that the consumer, among the prices that the consumer anchors on, the energy price is extremely important. And in that respect, sort of knowing that you're below $3 a gallon is very psychologically beneficial.
Is it consistent to have low oil prices and an outperforming energy sector?
It's a rough go to think about that in the long term. But again, And I think we've seen this over the entirety of this rally. There's a massive dispersion, the lowest correlations of really in many years among stocks. And I think when you look at the energy sector, you're going to see winners and losers based on where this is all going.
Do you see a reason to invest more in Latin America as a result of the Don Rowe doctrine that we keep hearing about?
Interesting question. Frankly, the reason that we think that the rest of the world, Latin America included, is more interesting is because we think you saw a very significant top in the dollar a year ago. And all else equal, again, over the long haul, what we started to see was portfolio rebalancing away from the U.S., dribs and drabs, slowly, and frankly, that's not going to accelerate given the fact that our view that the AI theme has further to run. But over the long term, if you believe, as we do, that you've made a significant top in the dollar, you want to diversify to the rest of the world.
The oil majors are jumping on this news, not so much crude energy. Before the weekend, as opposed to after the weekend, would you have a different view on potentially wanting to invest in the U.S. majors?
Again, if you look at 2025, one of the themes has been the Trump administration sort of influencing the selection of winners and losers on various themes, obviously steel, rare earths, et cetera. Clearly, there's an element of this happening now. We don't know what it looks like, but we do know that Donald Trump is a businessman, and the endorsement of Rodriguez, given her experience in the oil patch, really tells you that that's where the emphasis is going to be.
It does potentially help put a lid on oil prices, but when you think about AI, there's one issue of affordability that Americans are dealing with, and that's electricity prices. How are you thinking about that this year, given it is a midterm election year?
Well, it is no question that that is the push-pull. It's been the push-pull the entire year. But again, all else equal, the president has shown an ability to influence events that moderate oil prices. And at some point, that's likely to flow through to the rest of it. But again, the intent is because of the recognition of the importance of AI as a theme, both for the U.S. and on the U.S. corporate level.
Can we finish with a sentiment check? Year-end price target, 77.50. Been busy speaking to clients. When you talk to them, are they more excited about what can go right this year or more worried about what can go wrong?
I would say it's in balance, to be perfectly frank. What bothers us is that this is the first time in my memory, going back to when I was on the buy side, that there was no strategist on the street that had a price target below where the index level is. Thank you, Bloomberg, for compiling that information. And what we found that over the course of last year, when sentiment got tipped too far in one direction, you had pullbacks. And here we are at VIX 14. So to assume that it's clear sailing, for weeks on end is probably a faulty assumption.
Stifel's Barry Bannister, the low at 7K on the S&P year end.
No one's expecting any kind of significant decline. I do wonder, though, what the gains mean in the context of metals, in the context of potentially the dollar losing value. Is this a different kind of rally when it comes to the inflation that you're seeing in real assets versus the financialization of the system?
Julian, good to see you.
Good to see you.
What is it, January 6th? We can still do Happy New Year?
And we can do congratulations, John.
Larry David, I think it's only the first 3 days.
Oh, for gosh sakes. I think you could do it until
February.
February.
The first full week back.
Super Bowl.
7 days. Super Bowl.
Super Bowl's the cutoff.
Yeah. That's ridiculous.
I think Valentine's Day. Happy Valentine's Day. Happy New Year.
That is ridiculous. Julian, thank you. Up next on the program, we'll catch up with Sonal Desai of Franklin Templeton Fixed Income from New York City. You're watching Bloomberg TV. Two-day winning streak on the S&P 500 this morning, just about unchanged so far. Yesterday on the Nasdaq, snapping a 5-day slide on the Nasdaq 100, adding just a little bit of weight to the rally, up by 0.06%. The bigger moves are actually over in Asia, so check it out. The Kospi in South Korea in 3 sessions up by more than 7%. Another all-time high in today's session, up by 1.5%. Global equities doing nicely. MSCI Asia Pacific absolutely flying to start the year.
Yeah, led by big tech, because ultimately the consumer-facing technology coming out of Asia really has been driving the boat. Korea is interesting also because Korea and China have recently tried to mend ties, so people looking at some geopolitical risk potentially waning there, but really a focus on the rest of the world, given the fact that so many people think that the dollar really is going to weaken this year.
People love to throw mud at the S&P 500 and concentration risk. The Kospi, Samsung Electronics.
A lot of mud to be thrown around.
There's another company in there too.
Yeah, exactly. Just
maybe
one.
2 companies worth talking about at the moment over there.
Look,
I mean, I'm not throwing too much mud, you know what I mean?
Yeah, but the mud is warranted. I mean, ultimately, we're talking about Samsung and some of their Android phones and potentially getting ahead with respect to Google and Gemini, et cetera. You're right. It's concentration risk all around.
Futures this morning doing okay. We're just about unchanged on the S&P 500. Turn to the bond market. 2-year, 10-year, 30-year bond yields this morning high, yesterday lower. ISM manufacturing coming in a bit softer than expected. Through the week, you're getting a ton of economic data to start the year, looking back to the month of December and a preview of what's to come. Looking ahead to the payrolls report really on Friday. We're building up to that big moment Friday morning.
And it potentially is the first cleaner read since the government shutdown. Yesterday's ISM manufacturing was interesting because it came out weaker than expected, in contraction, yet again a 14-month low. And yet it wasn't bad enough to be bad news for equities. It was just bad enough to keep the Fed in action, which really is going to be the key goal for so much of this economic data, at least according to bond and stock traders.
More data coming up a little bit later this morning as we count you down to the opening bell. About 3 hours away. Let's get you some morning movers and cross over to Danny for more. Hey, Danny.
Hey, John. I'm going to stick with the tech theme because we are in the middle of CES in Las Vegas, and we're getting some announcements. One of them being that NVIDIA is on track with its new Rubin chips. NVIDIA not really moving this morning, but CoreWeave is, because they have announced that their next data centers in 2026 are going to be integrating Rubin technology. They're going to be one of the first cloud providers to do so. So those shares being bid up by more than 1.5% this morning in the pre-market. We also got an announcement from Intel, new laptops coming from Intel with new processors. That's on track too. The company over there saying that it's going to help with AI integration into laptops. It's really a first test to how much Louboutin is able to do with all these investments coming into Intel. Those shares up just under 1%. Finally, wrapping things up with some earnings in the tech sector. Microchips, a semiconductor company rallying 4% in the pre-market, pre-announced earnings yesterday and upgraded its sales outlook. Also with the theme of AMD's Lisa Su saying that demand is there. Citi saying it's a positive first read and it's an early read, so more good news might be to come, John.
Danny, thank you. We'll take that. Thanks for the update. More from Danny in the next hour. On our radar this morning, the President Donald Trump telling NBC News active Venezuelan leader Delcy Rodriguez has been cooperating with officials. President Trump clarifying there was no contact with Rodriguez prior to the capture of Maduro. Elsewhere, US and European officials meeting in Paris to try and finalize security guarantees for Ukraine. Sources telling us here at Bloomberg that negotiators are working to integrate a US proposal that could put American boots on the ground after the war. And finally, the president also expecting to address House Republicans at their annual GOP member retreat later on this morning. Republicans set to discuss their 26th agenda ahead of the upcoming midterm elections later this year.
So a lot of people are expecting Venezuela to dominate the conversations. I'm actually more interested in some of the other things, the fiscal agenda that could potentially come to the fore with respect to healthcare and some of the other initiatives, especially given some of the bills that could come to the floor this week. A real question here, especially from a market perspective, how much fiscal and monetary will backstop this market. We might get a real clue after this meeting.
This was supposed to be all about affordability into the midterm election. This is what Trump's top pollster have already told the speaker and other House members. This is what you need to focus on. But now the elephant in the room is going to be completely overshadowed by Venezuela, because the president has been talking about since he first ran in 2016 that he will not nation build. And how do you do that? And what is the extent of U.S. military and economic aid to Venezuela when you said you will not nation build? But at the same time, the president is saying he's running the country and he's not afraid of potentially putting boots on the ground. And that's got a lot of Republicans up in arms ahead of the midterm.
Who are the notable Republicans? Where you see the cracks in the party in Washington?
Well, at the moment, the ones that are the most vocal right now are definitely coming from the Senate. But I think today, after this closed-door meeting and this retreat, you're potentially going to hear more from House Republicans. The Speaker yesterday kept defending and saying, we are not running the country, there are no boots on the ground, and it is very different than what the president is willing to say out in the open to the press.
You say closed door. Doesn't this thing leak in real time?
Yes.
Doesn't it usually leak in real time?
I think the president's remarks potentially could be if they open that up. But the real conversations are going to be,
Aren't they like texting Jake Sherman in real time? We often see that, don't we?
Yeah, sometimes.
Yeah. I want to understand how this is reading through to the constituency, right? Like, this is one thing that we haven't seen, and there has been a real unity so far among Republican Congress members out loud. Have the polls ratified that, considering exactly what you just said, which is this wasn't exactly on the MAGA agenda?
Only 1/3 of Americans expressed support for this in the most recent poll from Reuters Ipsos that was done right after this. I think a lot of Republicans are taking this twofold, and we spoke about this. You can think the operation in itself was stunning, bold, brilliant. Delta Force, the American military might, is incredible. At the same time, a lot of Republicans are questioning, what does this signal? What's the day 2 plan? And what is the timeline for all of this really to evolve?
Look out for that very leaky closed-door meeting a little bit later on. Elsewhere, investors looking to a fresh slate of economic data to kick off the new year. Sonal Desai, Franklin Templeton Fixed Income writing, I maintain a constructive outlook for US growth. There is a lot of uncertainty, however. I see the balance skewed towards inflation risk, especially in the first part of 26. And I'll join just now for more. Sonal, good morning. It's good to see you.
Good morning. Nice to see you.
It's very nice to see you. Happy New Year. Let's talk about that source of inflation risk. What's the most prominent source of inflation risk for you and the team?
The fiscal impulse. So you were just talking about what we hope to see. But the reality is this week, we already know the big, beautiful bill is going to hand out a lot of goodies across the board, whether we're talking about the consumer, whether we're talking about industry. All of these factors lead to inflation. And we haven't actually, something which comes on and then moves off the front page is the $2,000 rebate check. Remember that in the first 3 months of the Biden administration, we helicopter dropped $1,400 checks, and I've always maintained that was one of the principal sources of the inflation burst we saw, that massive fiscal splurge. If we get that splurge in H1, it results in consumer demand. And I know that there is a lot of concern and angst about the labor market. The labor market is a different labor market. I don't think you can read 30K jobs the same way you could read 30K jobs 2 years ago. That's supposed to be balance right now. So if you're above 30, the economy is kind of treading water.
Do you see companies potentially passing on more of these higher costs if the consumer is able to do it because they have more money in their pocket?
Yeah. I do actually. They're passing on the higher costs, but also genuine higher demand. The one thing which continues to flow through is the American consumers' desire to consume. And I'm very interested to know what the end of this Christmas season will look like. But looking at what we're hearing in real time, it looks like it's going to be a strong one.
Putting these two stories together in Washington, D.C. right now, the president is clearly putting a lid on oil prices going up when it looks what's happening in Venezuela. At the same time, they're going to potentially get more fiscal impulse ahead of the midterm election. Does the oil depression of a price help the potential stagflationary fears you have?
So it's not stagflation. I'm expecting growth of 2.75 to 3%, driven by that consumer demand, driven by the fact that we're getting private sector investment in this country between last year and this year. It's around $1 trillion. That's more than it's about as much Germany is going to do over 10 years. So when you stop and put that into perspective, you've got a lot of tailwinds coming in for growth this year. So it's not really stagflation that I'm talking about. I'm just saying that I don't expect major advances on inflation. Now, can oil be the game changer? I don't think so. I don't think in the near term. I think Venezuelan oil, that's a 2-3 year out story because there's a sentiment driven, yes, there's going to be a lot more supply, but how much actual supply are you going to see in the near term? So
we talk about inflation as though it were a monolith, and inflation can be expressed through the market in many different ways. It can be a higher long end of the yield curve. You could see, for example, the dollar weaken substantially. You could see metals prices go up significantly. Which node do you think will transmit through markets most directly?
I think a little bit of all. So you're going to see a further steepening of the yield curve in my book because I think the Fed should not have cut up to 350, and if they actually go further than 350, I think it would be a substantial mistake, and we're going to see a significantly steeper yield curve. Because if we stop to think, the Fed has cut 175 basis points and 10-year yields are higher. than they were before they started cutting, which means underlying the market's apparent sanguineness about everything that's going on, clearly there is some concern on the fiscal and the inflation. And in terms of the dollar, I'd say the dollar is a little bit mixed in terms of the G3. I think we're pretty close to fair value against the euro, actually. And I think we're massively overvalued
Can I
against
jump
the
in?
yen.
Because you'll acknowledge the
Yeah.
bulk of that move was in 24, not 25.
Yeah, absolutely.
In 25, they cut interest rates and bond yields on a 10-year maturity actually fell. They didn't rise. What's changed for 25 in the cutting cycle of last year compared to what we saw in 24?
Because I think this is the year you actually if you get the fiscal impulse that I'm talking about, those tax rebate checks, so the consumption demand, the tailwinds are stronger. I think in addition, on the non-AI hyperscaling front, we actually haven't seen that much investment last year, and I think we probably will this year. So I think there are lots of tailwinds to growth this year that we didn't actually have last year. And you had everything related to the tariff-related uncertainty, which really skewed one half of the year. So I think when Tariffs Liberation Day was first announced, everyone was sure that meant a recession in the US. I didn't. Having just said.
Congratulations.
But it was, so I think we just start from a different spot.
So a steeper yield curve in and of itself isn't necessarily negative for the market. It can be actually really positive when it comes to financials. The absolute level of yields does matter.
Yes.
What's the stopping out point for 10-year yields where suddenly risk assets lose their luster?
So I think, I think that fixed income markets have shown an ability to absorb all the way to 475 and above. Equity markets, it's a different question, and I'm not an equity person, so I'll duck that. But I'll just say that, do I see 10-year yields going back to those substantially above 450, close to 475 levels? Actually, I do. If you don't have the wild card, which is something which knocks the economy into a recession, and really, it's just not my baseline. If I look at the tailwinds coming from monetary and fiscal policy right now, it's very hard to argue that we're heading for a weakening of this economy.
Equity guys love to talk about bonds. You bond people can talk about equities. The spread in the last 30 minutes is three cuts. You're basically at zero for this year. And Julian Emanuel of Evercore, equity guy, is at 3 for this year.
No, and I think that's the difference, because I think equity people do get concerned. Certainly within my own firm, my equity colleagues get very concerned when I say that, honestly, they shouldn't have cut last time, and I'm not sure they're going to cut at all this year.
Let's be really honest.
Yeah.
Equity guys talk about bonds, and bond guys talk about equities all the time. They just preface it by saying, we don't cover that, but let me tell you. That is what happens every single time.
I agree. What can I say?
So it's good to see you. As always, thanks for dropping by.
Thank you so much.
Sonal Desai there at Franklin Templeton Fixed Income. Let's get you an update on stories worldwide with your Bloomberg brief. Let's check in with Yahara for more. Hey, Yahara.
Hi, John. Denmark's prime minister saying NATO will collapse if the U.S. attacks Greenland. The warning coming as President Donald Trump re-ups his desire to take over the island nation. Stephen Miller, a top aide to the president, telling CNN Greenland rightfully belonged to the U.S. and the Trump administration could seize it if it wanted. Meanwhile, copper is extending its rally above $13,000 as investors bet on a tighter market. Possible U.S. import curbs, rising demand, and production constraints are fueling bullish calls on the industrial metal. U.S. inventories of copper also surging with 44 straight days of net inflows in COMEX-tracked warehouses. And in sports, Scotland is preparing for its first appearance in the World Cup since 1998. The country's first minister proposing a national bank holiday on Monday, June 15th, the day after it plays its opening game against Haiti in Boston. That's your Bloomberg Brief. John?
Yahara, thank you. I'm not responsible for putting that story in the news report. Maybe Yahara is.
I just want to understand the context.
We should be on holiday for the whole World Cup.
I think that
I agree. And I, at minimum, think we should take the show on the road because I don't want to miss that many games.
First course of business for Mehman Dalmi, apparently, is to make the tickets more affordable. However,
Good,
there are
some
no
of them
games.
are like $90,000.
There are no games in New York City. They're in New Jersey.
Yeah, well, maybe make soccer affordable again.
My goodness. Up next on the program, NVIDIA's new frontier.
The amount of computation necessary for AI is skyrocketing. Vera Rubin is in full production. We're announcing Alpamayo, the world's first thinking, reasoning, autonomous vehicle AI.
At this point, I can't keep up, so frankly, he's going to help us. He joins us from HSBC in just a moment. From New York, This is Bloomberg. Some people wake up and choose violence. Drew Mattis writes in from MetLife, who would pay to watch Scotland versus Haiti?
Wow.
That is
Shots fired.
absolutely
All right,
brutal.
so let's hear your response.
I would happily pay.
Internet, do your thing.
The Scottish fans will make that quite an atmosphere.
How much would you pay?
Also, I would go to any World Cup game. They're going to be amazing.
Not going to answer that, Bramo. Futures look like this on the S&P 500. Positive by, or rather negative by, close to 0.1%. We're up on the Nasdaq. The Nasdaq yesterday snapping a 5-day slide this morning, high by 0.06%. Really muted price action so far. Let's talk about big tech. Under surveillance this morning, Nvidia's new frontier.
The amount of computation necessary for AI is skyrocketing. The demand for NVIDIA GPUs is skyrocketing. Enormous amounts of investments coming into this industry, which explains why we're so busy. Today, we're announcing Alpamayo, the world's first thinking, reasoning, autonomous vehicle AI. I can tell you that Vera Rubin is in full production.
So here's the latest this morning. NVIDIA announcing a new line of products, including its next generation of chips. Its top-of-the-line Vera Rubin processor on track to debut later this year. Frank Lee of HSBC has a buy rating and 320 price target on the stock. Frank joins us now for more. Frank, welcome to the program. AI is skyrocketing. Demand for GPUs is skyrocketing too. Frank, put some numbers on skyrocketing. What does that look like through this year?
I think, look, NVIDIA is going to see a really strong year. We've highlighted it a couple of months ago that, based on what the allocation they've given at TSMC, they're going to see over 100% type of capacity growth. But I think a lot of this was already widely expected. So, I don't think there was as much of a surprise from the CES. I think probably the most interesting part was the Alpamayo in terms of the autonomous driving, because this is the first time we've heard Jensen really talking about this. So I think that's one of the exciting things we've seen from the CES show.
When's that actually going to be meaningful for the top and bottom line, Frank?
So that's a great question, Jonathan, because I think that is one of the problems of why I think that it's an exciting new direction for NVIDIA. But as far as timing, in terms of the TAM, when earnings are going to come through, I think it's still largely further out. So I think there's not a very good idea of when this contribution is going to come in.
Frank, do you have a good understanding of what exactly the Rubin chip is? I ask this because I was trying to understand the 88 different strands, and then you have 140 different avenues. I mean, do you have a sense of why this is such a significant upgrade from the previous iterations?
Yeah, I mean, I think the computing power continues to go up. But more importantly, I think the other thing that NVIDIA talked about on this for the CES was the introduction of more networking chips and storage. So ultimately, they're talking about trying to bring down the cost of the solution, bring down a number of GPUs that you need in order to do the training. So in a way, to make everything a lot more efficient. So I think that's one of the positives behind this. But again, they've introduced this platform as early as CES last year. So while there's a lot of excitement about the ramp up, this has been coming for quite some time now.
Which is the reason why maybe you aren't seeing that much of a reaction in the pricing. We've heard some pretty significant things announced overnight. Really, it seems like, as John was pointing out, Samsung and some of the Korean memory chips, as well as the smartphone that Samsung is coming out with, those are actually generating the most excitement. What is actually the most interesting that you've seen so far coming out of the confab in Vegas?
Yeah, so I think you bring up an interesting point about Samsung. I think one of the reasons Samsung has done so well is that the strength in the memory recovery has been much stronger than expected in the last couple of months. So you look at names like Micron, they've moved up quite aggressively. They've outperformed a lot in the last month or two. And, the price hikes that we see for memory specifically will continue to go up in the first half of this year. I mean, ultimately, how much further it goes up, no one really knows for sure. But the momentum clearly is a lot stronger behind memory at the moment, which is why I think there's more excitement around there.
Frank, when it comes to China, we heard from the NVIDIA CFO yesterday saying that there is strong demand for the H200s in China. Do you foresee Beijing allowing companies to buy those chips?
Yeah, that's a great question, Maria, because I think one of the disappointments was that August last year, when the H20 got approved to go into China, the demand was fairly lukewarm from the China government and the China market in general. It does seem like we are seeing some positive demand for H200 this time around. It's a better chip. And I think this is one of the things that's been highlighted by Jensen as well. And we do think there is some upside potential now. So this is one of the few, I think one of the recent positive news from NVIDIA from coming out of China, at least, is that the H200 does seem to get a much better response than the H20 was a couple of months ago.
Does it even matter because they're talking about the Rubin right now and how powerful that's going to be?
Yeah, I mean, that's been one of our bull cases that, we don't really need the China business to come in. Our numbers, for the most part, which are largely seeing very strong growth, doesn't really incorporate the China business really coming back. So we don't think they really need it. So we think this is an optionality if China comes in. But the majority of the growth, as you pointed out, is still coming from Rubin going into this year.
Frank, it seems like everyone's talking about the whole tech story as completely isolated from Venezuela and not involved with the geopolitics in any way. And yet around this table, we were talking before the segment about how there is a real geopolitical tilt to this. What happens if China invades Taiwan or prevents shipments or does war exercises? What does that do to the entirety of the ecosystem that's being talked about at CES and beyond?
I don't think it's a scenario anybody can envision, because if anything does happen along those lines, then we've got a lot bigger problems in the world instead of NVIDIA chips. So I think that's not really a baseline scenario I think people are looking at right now. So I think it's too big of a question to really even fathom if anything like that does happen.
Frank, of the risk factors on your radar right now, what is the most prominent one for the year ahead?
I think right now, what has been a fair, feedback, especially on the AI trade in the last few months, has been two things, right? The first is, does Google become a lot more competitive with their TPUs and their whole AI strategy? And the second thing is, some questions around OpenAI's funding. I think we do see that there's still some potential gaps there. So I think those two are probably going to be the bigger question this year in regards to AI.
Frank, good to see you. Thank you, buddy. Frank Lee there of HSBC. Thank you, sir, on NVIDIA and CES. Don't miss the AMD CEO, Lisa Su, right here on Bloomberg TV, 11 a.m. Eastern Time, speaking with Bloomberg's Ed Ludlow on Bloomberg Technology. Later on, the NVIDIA CEO, Jensen Huang, at 1:15 p.m. Eastern Time. Bramo, I think we're all right there with you, even if Frank Lee's not. I have to say, Venezuela was not on my CES bingo card in Las Vegas.
I don't think it was on anyone's bingo card for this weekend, which is the reason why it took so many people by surprise. Frank's response was really interesting. It's such a significant risk on so many different fronts that we can't even imagine it. So let's just put that aside and continue betting on what we can bet on, which raises a question. How big of a potential risk scenario is any kind of even war games to this entire trade?
The U.S. stock market is percolated on this AI bubble and this trend, right? Maybe not a bubble, but this AI trend. Okay, 60% of the world's semiconductors comes from Taiwan. 90% of the advanced chips come from Taiwan. So yeah, it'll be bad for NVIDIA, but it'll be bad for everyone's 401k. And that is just speaking about the financial impact, not, of course, the geopolitical and human impact.
So bad it's difficult to consider. Up next on the programme, we'll catch up with Emily Roland of John Hancock, Ed Mills of Raymond James, the former White House senior advisor, Amos Hochstein, and Matt Hornbach of Morgan Stanley. The second hour of Bloomberg Surveillance just around the corner.
We come into the new year prepared for some volatility.
Maybe it's time to rebalance a bit.
We're already seeing some rotation.
What the market doesn't understand is the president's willingness to take risk.
If we get more macro risks like this, it's going to be hard to keep risk priced where it is.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures on the S&P 500 following a two-day rally, pulling back not even 0.1%. On the Nasdaq 100 following a five-day slide, which we snapped yesterday, we had just a little bit of weight to the rally, up 0.1%. Snoozy morning gets more interesting through the week ahead as the week grows older. Tons of economic data. PMIs later on this morning following a weak ISM manufacturing yesterday. ADP and JOLTS data, that comes tomorrow. Jobless claims on Thursday. Then the big one, the headline event, payrolls Friday, just around the corner.
Watch the unemployment rate. At a certain point, if you do see the unemployment rate tick higher, how much does that put the Fed squarely back in the game in terms of cutting rates more aggressively? And this is the big debate for markets right now. How much accommodation will there be on the monetary side and on the fiscal side? And if you get a monetary apparatus that really is cutting rates aggressively, that can give extra fuel to an equity rally that's looking past any kind of weakness that might come through in that unemployment rate.
Maybe you can look past the headline payrolls figure and speak to excuses elsewhere and say 50K is the new normal, 30K, 25 even. I don't even know, but perhaps you can dismiss that. It gets harder to dismiss the climb in unemployment through 4.5%, and really you need to see that settle down, not just for the economy, but I think also for the politics down in Washington.
Oh, absolutely. Aditya yesterday was talking about 4.5% for him means the Fed's going to cut. We're going to be speaking to Andrew Hollenhorst. He says he is expecting a 4.7 unemployment rate. If you still have inflation above your target, and already the polls are talking about affordability is our biggest concern, and then people start losing their jobs, this becomes a terrible cocktail ahead of the midterm election.
That's what's going to give the Doves on the committee over at the Federal Reserve a credible case to cut interest rates, even with the president making a political case to cut interest rates.
If they cut rates, though, because they have to, because of true weakness, will still be construed as a positive thing. Morgan Stanley came out with a note saying that one of the big risks is that you do get some sort of jobless expansion that ends up with bad news being bad news. The Fed is cutting for the wrong reason, which is people don't have the jobs to give them the incomes to go out and keep spending. It goes to the question of, can you get a broadening out in the equity rally, or is it going to be concentrated in the AI trend without the rest of the economy participating? Look, there's still so many questions that we haven't gotten clean data for months. So all of a sudden, can people look at this data and say, okay, now it's clean, we're getting a true read, or are people going to still have the same questions?
65K is the estimate in our survey. That's going to change ahead of Friday as more estimates come in. The range is pretty wide. 155 is the high, the low is 23K. Coming up this hour, we'll catch up with Emily Roland of John Hancock as energy fuels a record rally. Former White House senior advisor Amos Hochstein on new leadership in Venezuela. And we'll catch up with Matt Hornbach of Morgan Stanley, predicting some inflation payback. We begin this hour with stocks holding near all-time highs. Emily Roland of John Hancock writing, at the end of the day, markets are still being driven from momentum. Emily joins us now for more. Emily, good morning and a happy new year. Let's talk about what is in the driving seat right now and why you're looking to the international equity story.
Yeah, it's all about momentum, John, and welcome back and Happy New Year. I'm only going to say that this week. I'm going by the John Ferro Happy New Year rules here. But this has been an environment where we still see technicals and momentum in the driver's seat. You almost have to remove the macro from your brain right now coming into the new year. Some of the data you mentioned around ISM yesterday, one of the most notable elements of that report to us was in new orders. A very small portion of industries reported positive new orders, most of them reporting weakness there. That is a key leading indicator. We're still watching, some of this macro weakness. The business surveys are telling you things aren't great, but meanwhile, the markets are saying, get ready. We're going to see a massive cyclical expansion. The economy is going to accelerate meaningfully this year. So there's a major disconnect right now between macro and markets.
How do you think the story reconciles?
Yeah, I mean, we've got to watch what happens from a fundamental standpoint. If companies can continue to show that they're managing some of these macro risks, that they can maintain margins, that they can deal with some of the pressures around tariffs, and we can continue to see that earnings growth come in, that's going to be the key tell. But analysts, John, are penciling in 15% earnings growth for S&P 500 companies in 2026. We think that looks awfully lofty here heading into the year. So really, that's what we're going to be watching as we kind of come into Q4 earnings season here in the next couple of weeks.
Well, Emily, on average, it might end up being true just because it's led by a cohort of about 10 different names that are leading the AI trend, not necessarily hinged to the broader economy. At what point do you think that is going to be what ends up continuing to win with the rest of the 493, whatever other cliche you want to put out there, lags behind?
So we are still overweight technology companies. We are looking for quality in this market. This is companies with great return on equity, the ability to really produce outsized earnings growth at a reasonable price. So think about value, quality value at a reasonable price. Tech score is high on that, but we're also looking for areas like industrials to outperform in 2026. That is our favorite value sector, our favorite cyclical sector into the year. We're mixing that in with some comm services, which is sort of tech light. And then you've got some healthcare in there as well to give that more defensive posture. So we do think that there should be some broadening out in terms of earnings trends into the year, but we are not ready to bet against tech. It still has the best earnings across every companies across the globe right now. And I would say on that front, what you're seeing now is just this massive rotation continuing into Europe. You look at European stocks, they were up about 35% last year on 3% earnings growth. So the momentum is there right now. You think about momentum sort of stalling in the United States. The poster child for momentum right now is overseas. So we want to be mindful of that as well.
And you lean in, how much do you lean into that based on some of the geopolitical backdrop as well? This question about what the United States' latest move in Venezuela would do to its international standing or potentially diversification away from the nation.
Yeah, we don't look at the situation in Venezuela as being, a massive impact on markets. But Julian Emanuel pointed this out earlier. It's been about the weaker dollar. The dollar weakened meaningfully, of course, last year. It's a little bit weaker, to start 2026. And that is just a massive liquidity release valve. It helps non-U.S. equities. It helps riskier assets outperform. And the weaker dollars was hugely accretive to the earnings of non-U.S. equities last year. If it continues into this year, that is another reason to continue to hold on to some of those non-U.S. assets. Again, we would do it in a higher quality way. Our managers are finding opportunities in areas like industrials. They're finding opportunities in areas like healthcare. So we would think about being very active in that space.
Do you think that trend is going to continue, the weakness of the U.S. dollar?
Well, Annmarie, it's really to us been more of a sentiment trade. Like we get our textbooks out, we look at all the normal things that can help you understand currency differentials. And usually when the U.S. economy is doing stronger, check. When we're seeing a better labor market, check. Better earnings growth in the United States, check. Those things would all tell you that there should be a flood of dollars onto our shore, in addition to the fact that interest rate differentials would point to a stronger dollar as well. Again, you've got to remove that sort of macro, those historical textbooks from your brain here, and think about sort of this sell everything America trade that's really permeated markets, and it's included currencies. So, the momentum certainly is there. I don't think that we'll see another sort of 10%-ish decline in the dollar into this year. That one's tough for us to see. But again, the momentum is with the weaker dollar. So we want to think about having elements in the portfolio to help position for that continuation.
Emily, do you think the Fed needs to continue cutting interest rates to support that view?
We do. John, there's something that the market's just not picking up on that we've been talking about for a while, which is the disinflation that's coming from the shelter component of housing. It's 35% of CPI. The BLS measures are very, very lagged. Things like Zillow and Apartment List are telling us that home prices and rental prices are just about flat for the year, while the BLS is telling us that they're up 4%. If you plug those numbers in terms of that real-time data, you're actually getting closer to the Fed's target, if not through it. So the weakness that we're seeing in the labor market, everybody's brushing past these 2 months of negative payroll reports. That's pretty significant. It doesn't happen outside of recessions. The biggest risk, I think, though, to the Fed cutting is if we do see commodity prices rally here. If these geopolitical risks extend to things like oil and copper rallying, that is a risk to the view and also a risk to the sort of bullish case for equities into this year.
Yeah, I was going to say, what about copper, right? What about some of these other metals? I do wonder, just getting your view on the geopolitics of the situation and how you include that in some of your thesis. It strikes me that a lot of markets are saying, well, you don't understand the parameters of something, you just ignore it and focus on the small aspects that you do understand. Is that kind of how you're approaching the entire situation and the potential what ifs that people are coming out there with when it comes to Greenland, when it comes to Taiwan, when it comes to other areas around the world?
Yeah, Lisa, we tend to not use geopolitics as an input to making investment decisions. It tends to be short-lived and investors tend to move past it. And you're clearly seeing that in markets right now, sort of brushing this off. Obviously, we're seeing the impact in precious metals, oil, et cetera. but really not much. Again, it's a momentum-driven market right now. That is the pervading theme right now. It's like trade first, ask questions later, and that's really what we're watching. It's a tricky environment for those of us that are looking at macro factors and we're looking at earnings, but that's really what's been in the driver's seat right now, and markets largely looking past geopolitical issues.
Emily, appreciate the framing and Happy New Year. It's good to see you, as always. Thank you. Emily Roland there of John Hancock on the latest in this equity market.
Yeah, it seems like everyone's looking past it. I like this quote from Morgan Stanley, the team over there. They said macro concerns still matter, but micro will become a larger driver of asset returns in the cyclical recovery. How much is because you just can't know with macro? What edge are you going to have trying to get into the minds of a truth posting?
We were talking about this at the start of the week. Even if you'd predicted some of the events that took place last year with absolute accuracy, getting the price action in response to it correct by the end of the year, tremendously difficult.
This has been a humility building exercise, and you have a lot of humility currently out there. There's just a question, though, of whether AI can win all, and that seems to be what everyone's throwing their same hat into. So let's see if it can come to fruition.
That really has been the lesson since the pandemic.
100%.
Stay humble. Equity futures on the S&P 500 just about unchanged, with an update on stories worldwide with your Bloomberg Brief. Let's check in with Yahara Arnott for more. Hey, Yahara.
Hi, John. China is imposing new controls on Japan for exports with any military use. It's the latest move in an ongoing spat between Asia's top two economies. China's Ministry of Commerce cited comments from Japan's prime minister regarding Taiwan. Trade officials in Japan declined to comment. Meanwhile, the Corporation for Public Broadcasting is officially shutting down after months of government funding cuts. The agency, which helps fund NPR, PBS, and multiple public television and radio stations, voted to dissolve itself following nearly 60 years of service. According to a statement, it plans to distribute all remaining funds. And Amazon is unveiling a new line of artwork-style TVs. The Ember art line is designed to resemble a piece of framed art and will come in 10 different colors. It will be available starting this spring in 55 and 65-inch sizes. The line starts at $898 for the smaller version. That's your Bloomberg Brief. John?
Is that without the box? Can you find out, Yahara? Is that without the box? Because Samsung did this, right?
Yeah.
But you have to get this box as well. And then you have to cut out a piece of the wall to put the box in to fit the TV flat to it.
I don't know any details about this, but I do know that this is going to be the future of your wall art, and you could flip it in and out, and it will be sort of coming up with content, and then do you license the content that goes in it, and do you have to pay a subscription fee for the artwork on your wall?
Isn't Samsung already doing this?
Or royalties? I assume that this is not new. This is just sort of trying to compete.
Get some more clarity in the commercial break, hopefully. Important issue. Up next on the program, new year, new agenda.
I am bringing those high prices down and bringing them down very fast. I will announce some of the most aggressive housing reform plans in American history. I'm also taking on the gigantic health insurance companies.
A conversation up next with Ed Mills of Raymond James, live from New York City this morning. Good morning. Futures unchanged so far this morning, just about unchanged on the S&P 500. Similar story on the Nasdaq, plenty developing down in Washington, D.C. Under surveillance this morning, new year, new agenda.
We're bringing our economy back from the brink of ruin. I am bringing those high prices down and bringing them down very fast. You will see this in the new year. I will announce some of the most aggressive housing reform plans in American history. I'm also taking on the gigantic health insurance companies that have gotten rich on billions of dollars of money that should go directly to the people.
So here's the latest this morning. President Trump meeting with House Republicans today to talk through their election year agenda. Joining us now to discuss is Bloomberg's Laura Davison. Laura, some suspicion that maybe the events over the weekend might hijack this meeting. What's top of this agenda?
So the president wants to keep this meeting focused on the midterms and affordability and some of these cost of living issues that House Republicans are hoping to run on in the midterms. But of course, the big story today is Venezuela. And it's hard to believe that Trump will go into a room with all the House Republicans and not address this, or that he won't get questions on it. But this really sort of presents the predicament that Republicans are in going into the midterms, of that Republicans have some ambitious plans, whether it be on healthcare or housing, that they want to address these issues, but don't really have sort of the concrete details worked out amongst themselves. Whereas, the president is really focused on foreign policy issues, and Democrats, seeing a lot of polling in their favor on when it comes to cost of living, inflation, affordability, have the upper hand, at least going into this year.
Election cycles are short, Laura, and that's often why we make some messy decisions in democracies. We make short-term decisions. What can they do that will actually lead to results that they'll see in the data by the time we get to the midterms?
The answer is not a whole lot. The biggest hope that Republicans have going into the midterms is the tax bill that they passed last year. Those tax benefits will start to show up for some Americans starting in their tax refunds that they'll see later this spring. But the problem with that bill is that it was largely an extension of tax cuts that were already in place. It included some new things, including no taxes on tips and that expanded SALT deduction. But for a lot of people, they just will see no change versus seeing that they've essentially avoided a bad scenario where tax increases went into effect.
Laura Davison, down at Bloomberg DC studio in Washington, D.C. Thank you very much, Laura. Ed Mills of Raymond James has this to say. Geopolitical tension will be a key theme for 26. Domestically, the focus is on the upcoming need to fund the government. Ed, we're back to that again. Ed, good morning.
Morning. How are you?
Look, we've heard a lot about affordability. How does that translate into policy in 26?
Well, a lot of it's still with President Trump. He could stop a number of the tariffs that he's implemented. I do think a lot of this is about their fiscal agenda that comes from the tax bill. It was made retroactive to his first day in office, but zero of that has actually hit the economy. We've estimated that that's about $350 billion that is going to hit the economy here within the next couple of months. It is true that this is going to be one of the largest tax refund seasons ever. For someone that gets the full benefit of the SALT deduction, that's an extra $800 a month for those households. So I do think that there is that narrative out there that this was largely an extension, but there was a lot of new stuff, and all of the new stuff expires by the end of President Trump's term. So it is supercharged in the next couple of years. This year is the biggest year. You add what gets added to this year, we're probably at $600 to $700 billion worth of fiscal stimulus that's coming into this economy. That's 2.5% of GDP.
Ed, is that enough, though, to make up for potentially higher healthcare premiums? The fact that there are potentially more higher costs that could be passed through because of tariffs, and then individuals' concerns about a more aggressive foreign policy from this administration?
Probably not. I do think that there was a lot of concern about the consumer in the end of the year last year. But as the consumers do get these higher tax returns, I think some of that concern depreciates. It doesn't go away. On the geopolitical, I think that just goes into the right track, wrong track question for a lot of voters. And generally, if the voter views the country is on the wrong track, they choose the other party. So that's something, outside of economics, but more on kind of the vibes and the feel for the voter.
John mentioned how today is going to be all about affordability, but really the cloud overhanging this retreat is Venezuela. Where are House Republicans right now in terms of their discussions with the White House and what they want to see following the capturing of Maduro?
I think they're probably pretty divided. There is the America First group within the House Republicans who have really supported President Trump because he was not an interventionalist internationally. And so what the House is going to be kind of grappling with is, if the Senate passes a resolution that limits the war powers, is there a push to bring that up? Because we do know that Democrats would support that. So Mike Johnson, as the Speaker, really has to bring his caucus together, try to focus them on getting that appropriations bill and say, we have some of the kind of day-to-day business of the government to get to. Let's give the president a little bit of a leeway here, see where this goes. I think that the president is also going to lean in heavily that this was a law enforcement action, not necessarily a military action. It is kind of parsing words, but from a congressional kind of impact here. If it was law enforcement, Congress has less of a role. If it was a military action, Congress has a constitutional role there.
If you put these two ideas together, and I realize that not many people were thinking this way, but I was thinking from the debt markets perspective as I was reading the Venezuela story, and not just about Venezuela bonds, but does this increase the deficit? If the U.S. has a more aggressive foreign policy and is putting troops on the ground, let's say it comes to that, we don't know, that's not what is in the base case in any way, is involved in other altercations, How much is this in the budget or potentially palatable fiscally from Republicans?
Yeah, I think that the kind of Republicans have been plenty fine with increasing the defense budget. If you look at a percentage of GDP, we're actually at a low since World War II on our defense budget. In the reconciliation bill, they added an additional $150 billion to be spent for the defense budget over the next couple of years. I do think this is President Trump kind of reasserting the Monroe Doctrine, kind of focusing more on the Western Hemisphere that has largely been focused on Asia over the last couple of years. So I think that if they needed to or wanted to, a vote to increase defense spending is absolutely in the cards. And I do think that defense spending is probably kind of on the upward trend. President Trump would say there are a lot of resources that could be extracted from these countries and that there is a dividend that would come from those resources that could pay for itself.
Are there any fiscal hawks left?
No.
Okay, just making sure. I mean, is that even on the agenda?
I'm sure there are, but there's no one. I've always said people are really concerned about the debt and the deficit when they're in the minority. They get into charge and then they care about their kind of policies, and debt and deficit concerns kind of are secondary. And it is other people's debt and deficits that they are concerned about.
We're shocked. Is it too early to talk about 28?
It's never too early.
Let's talk about it.
Yeah.
The influence of Floridian politics on the leadership of this party right now. The fact that this operation was led not out of Washington, but out of Mar-a-Lago. How important is all of that?
Well, I think that you also look at the influence of the expat community in Florida, of the Venezuelan community that has long wanted regime change in Venezuela. And Venezuela is the patron of Cuba. And you have Marco Rubio, Secretary of State, who is the son of Cuban immigrants. If he is able to bring about the end of the current regime in Cuba, politically, at least in Florida, that is as close as you get to kind of nirvana. So I do think that we're going to be looking at 2028. J.D. Vance, as vice president, always has to be kind of at the top of the list. But kind of number two, increasingly looks like Marco Rubio, as long as things continue to go well.
But how does J.D. Vance, an individual that definitely is against nation building and interventionists, how does he square this when he goes out and campaigns for 2028?
I think it's depending upon how much this is still front and center. I think one thing that is fascinating to me is we've had these major geopolitical events, and then we go a week or two later, and they seem as if they are kind of distant memory. We have had an incredible amount of geopolitical action over the last 5 years and very little market reaction. Probably the only thing that had a sustained, but it was still relatively limited, was the invasion of Ukraine. I even go back to 6 years ago. On January 3rd, 2020, we had the assassination of Soleimani that launched that year. I go back to 2020, the assassination of Soleimani was not the kind of story of 2020.
The pandemic kind of buried that pretty quickly.
Yeah, but it is, how quickly we move on.
I agree with you. Very quickly.
Yes.
TV time, we were told yesterday, right?
Yeah, basically.
Although what's about to take place in Venezuela is not going to take place on TV time, as we were also told.
Absolutely not. I mean, I think the administration would like that, and they're trying to take this pragmatic approach while continuing with Delcy Rodriguez. But tapping these resources Ed's talking about is going to take years and billions of dollars.
I'm just laughing about the past couple of years, not this in any way, shape, or form, but just the sensory overload. It's sort of like, it's sort of whack-a-mole. You can only focus on one shiny, bright light at one time, and if they're 50 million, then you just sort of lose focus.
Yeah, desensitized. I think very desensitized. Ed, it's good to see you. Thanks for dropping by. Ed Mills of Raymond James there. Coming up, we'll catch up with the former White House senior advisor, Amos Hochstein, as Venezuela's new leader is sworn in. Plus, Danny has your morning movers. Ava shares higher after announcing a partnership with NVIDIA. Their stock is up 23%. Counting it down to the opening bound with equity futures shaping up as follows. Just about unchanged on the S&P 500. On the Nasdaq, positive by 0.1% after snapping a 5-day slide in yesterday's session. The fun and games happening over in Asia. Asia tech is absolutely flying. Taiwan Semi, Samsung year to date. Samsung year to date, I think, is up like 14%. What a run already for 2026, and it is January 6th.
There's a lot of focus right now on the memory capabilities of Samsung, also a real focus on the hardware. And could you see the Android supersede the iPhone? Android is the best-selling smartphone in the world. It might actually end up being the iPhone, but nonetheless, they are getting an edge when it comes to artificial intelligence and actually deploying it. That, I think, people are watching closely.
Big year for big tech in the last 12 months worldwide, for that matter. Big year for bonds as well. Treasuries performed very nicely. 2-year maturity yields lower, in line with the Federal Reserve move. 10-year maturity as well. 10-year, the shining light. The US 10-year, the rest of the world not great, yields higher. The US 10-year down something like 40 basis points last year. This morning, 417.70.
Yeah, and the question that a lot of people have is, can it continue, especially with Fed rate cuts? Do you have this disinflation that Emily Roland was talking about tied to housing, tied to gasoline prices, or do you start to see a divergence where you see that steepening yield curve, the Sonal Desai view of the world? I will say the 30-year yield's been really notable, and I understand it marches to its own drum.
Bit of leakage there.
But it's been leakage, and it's been really climbing higher despite the rally in the rest of the maturity parts.
Can the Treasury Secretary Scott Bessent keep getting what he wants, which is a 10-year yield closer to 4 than 5?
That's what he's going to try. I know he says he's what? He's America's bond salesman.
Top bond salesman,
That's how he decides his job. That's as long as he stays at that gig. The president had his way. He'd be moving over to a different portfolio.
We're still waiting to see if he ultimately says yes and goes over to the Federal Reserve.
Yeah, well, if things get messy enough, it might be a good exit strategy.
Possibly. Yeah.
True.
Are you saying if there's more Venezuelans, we might get Bessent down at
100%. Absolutely. Things get messy enough. Not my problem.
Also, job security.
Yeah, I mean, a lot of possibilities there.
The whole thing. The speech circuit afterwards as well.
Art?
It's just like...
art at the Federal Reserve?
Not that he needs the money, but you just mint money after you've been the Fed chair.
Yeah, not that he needs to do that, but
500K speeches.
I think at a certain point, though, it's about something else. It's having a seat at the table. So which seat at the table, and if sometimes you want to exit stage
You're
left.
going to be the most powerful man in finance, whatever room, whatever table you're sitting around. It doesn't matter who's around it with
I think
you.
he likes signing the checks.
Do you?
Like his signature on the bill.
Okay. But that's done now, right?
It's true. You've been there, done that. You can move on to the next thing.
Money's in circulation. Okay. Yields up 2 basis points, 417.89 on 10s. As we count you down to the opening bell, let's get you some single names, some morning movers. Here's Danny with more. Hey, Danny.
Hey, John. Kicking things off with some of the announcements we've heard at CES in Vegas. NVIDIA, a new autonomous driving vehicle is what they're working on, and they're going to be using some of the technology from this company, Ava, which makes LiDAR technology. I just want to point out, yes, it is up nearly 24.5%, but this is basically a micro-cap company, so all things said, that's not a huge move. Even so, it is moving on that NVIDIA announcement. Also, an announcement in tech this morning. Zeta, which is an enterprise marketing company, announced that it would be integrating OpenAI technology to give their clients, so those shares are up nearly 11%. We're back in that world where you make an AI announcement and your shares do well. Finally, a little bit of deal news. Sources telling Bloomberg that OneStream may be entering a take private with HG. That's the Europe-based private equity fund. Shares have been down 35% year to date for this finance software maker, so they are jumping just about 23% in the pre-market, John.
Danny, thank you. Thank you very much. That stock is flying. I was just reminded of that Mnuchin photo. Do you remember that?
Yes, I do, with his wife.
After signing the money.
Yeah, that was incredible.
Was that with the big?
Yep, with his wife, with the Jack with the gloves. And how about Jack Lou's signature? I'll still never forget that.
Yeah.
Just the zeros. I love that.
What was that about?
He's been asked about that many times.
I've asked him about that.
Honestly, clearly it's not a strong suit. I can relate.
Evidently. On a radar this morning, elsewhere, NVIDIA and AMD highlighting the insatiable demand for AI computing power. Both companies unveiling new chips and software at CES in Las Vegas, saying AI will require a massive increase in global computing capacity within 5 years. Elsewhere, Venezuela's government swearing in Delcy Rodriguez as acting president following the capture of Maduro. Meanwhile, heavily armed security forces are roaming the capital city of Caracas, detaining journalists and stopping drivers to check their phones. And finally, President Donald Trump telling NBC the US may subsidize efforts by oil companies to rebuild Venezuela's energy industry. Sources telling us here at Bloomberg News that Energy Secretary Chris Wright plans to speak with executives about the proposal later this week.
Yeah, and that it will take 18 months to actually accomplish a rebuild, something that, as you pointed out earlier, is a quite ambitious time schedule. This is going to be a real question. What is the conversation like with the oil majors? Oil major stocks have been flying. You saw the biggest two-day pop in the sector going back to April of 2023. It's going to be expensive. What kind of assurances do they need? unclear still whether they're on board with this because they haven't really had those discussions yet. The fact that the energy secretary is poised to speak with them gives you a sense of where they are in this process.
I think one thing that the oil companies do want to see is potentially the funds they already were owed decades ago from expropriations under the Hugo Chavez regime. They want to make sure that they are going to be compensated already what was owed to them before they go in and start investing billions of dollars.
And making a multi-decade commitment, you need some serious clarity before you do that. Let's build on this story. The US asserting control over the Latin American country of Venezuela.
We have an oil embargo in Venezuela. For them to do any kind of commerce, they need our permission. We have our massive fleet, our armada, still present there. This is an active and ongoing U.S. government military operation. And so, of course, we set the terms and conditions.
Joining us now is Amos Hochstein, the managing partner at TWG Global and the former White House senior advisor. Amos, a good friend of this program over the years. Thank you for making time for us this morning. I want to lead on your extensive experience in Washington, D.C., and not just sort of get tempted by the story playing out years ahead. I want to get your thoughts on what took place over the weekend. Were these ideas thrown around in the Biden administration? Were they ever considered? And what was your reaction to what you saw take place?
So first, it's Happy New Year. It's good to be back on the show. No, we did not consider taking a military action and kidnapping Maduro. We also, Venezuela is an annoyance to the United States national security. It's not a threat to us in any way. And I think there's a lot of ways to control it. In fact, I'd led an effort to get Chevron license back in Venezuela in order to get Americans released and to do other things. So we've always had a conversation about Venezuela because of its both its support for terrorism, its support for bad actors, and the fact that it was a oil-producing state.
There was a bounty, though, on Maduro's head under the Biden administration. So what was going to be the timeline and the goal to potentially get rid of him?
Look, Emma, we had very active discussions with the Venezuelans, some direct talks, some through mediators, about moving Maduro out of office. We did not recognize him as the legitimate leader of Venezuela. We did recognize the opposition having won the election. And the idea was that but it wasn't about Maduro, it was about the entire regime was illegitimate. And look, at the end of the day, if you take Maduro out and you stay with Delcy and the rest of the regime, you haven't really done much because he's out. But you haven't, they could have announced he's out, or we're now supporting the opposition, or we're now supporting elections over the next 60, 90 days in order to give the Venezuelan people what they deserve, which is to have their own elected officials. So I think now it's some kind of a puppet regime. We have to see how that will all work out.
Do you think Delcy Rodriguez is someone oil companies could work with?
I mean, look, she's been responsible for the oil file. In addition to being vice president, her brother is obviously a power player by being he runs a lot of Venezuela through his role at the legislature. I think they can work with her. I don't think the issue is can they work with her. They can, at the end of the day, they can work with anyone, almost. The issue is going to be what is the legal structures, what is the clarity. When Donald Trump's gone, are they going to get sued? Do they have legal authorities over whatever it is that they're going to be doing there? And do they want to do it? Annmarie, I think you said it earlier. You have Conoco and Exxon that have active legal cases worth billions of dollars against Venezuela in U.S. courts and in international arbitration courts. That has to be resolved. Then you have to negotiate leases. For which fields are we talking about? And then you have to do the surveys. The companies don't even know the condition of these fields, except for Chevron, of course. And then once you've done all of that, then you have to go in and say, okay, do I want to invest? And at sub-$60 oil, how many people really want to crush oil prices further? So this is a story, when it comes to oil, this is a story about 2029, 2030, 2031, as far as bringing any meaningful barrels back. For 2026, you're probably talking a couple of 100,000 barrels a day coming back on the market just to bring them back to where they were a little while ago, from, let's say, 800,000 today to 1 million. And then if you remove sanctions, you can get probably in 2027 or so to Do I know 1.2, 1.3? That's the story over the next couple of years. Anything beyond that volume will have to wait a few years.
Well, the president says, and he's signaling potentially the U.S. government could subsidize the oil companies' involvement. As he says that, does that signal that they will lift sanctions?
Well, I think I don't know. I don't want to predict that. You have to lift some of the sanctions because you have to let the oil out. I don't know what it means for the American taxpayer to pay multi-billion-dollar companies to invest in the infrastructure of a foreign country. I don't know how that's America first. I don't think that seems like America last. But I don't know what it even means and what assurances are there. And remember, they have to operate these companies not just based on Donald Trump being president. They could be facing in 9 months from now or a year from now, from January, a Democratic House of Representatives. They can see changes in elections. They have to have clarity. So what is this money and how long will it last for and what form will it take? And still, what am I doing for this money? So I think what's been absent from this whole conversation, clearly wasn't thought out before the operation, is the Venezuelan oil story itself. There are some barrels that you can get fairly quickly with just repairs of the equipment. For that, you have to lift sanctions. And you can have service companies going in. You can have some in-kind payments. But then what is left for Venezuela? These companies are going to say, I want to get paid back my debts.
Yeah.
I want to have guarantees that I get the barrels of oil that I produce. So I recover my investment first. The U.S. government's probably going to say these are not subsidies, these are loans, and they have to get paid back or some kind of guarantees because the banks won't want to guarantee this or finance it.
Yeah.
And then after all of that, and then they owe money and barrels to China, a lot of money and barrels to China. They owe stuff to the Russians. They have debts to the Indians. So where are the barrels going to come to rebuild Venezuela? And if they don't, if everybody get profits except for the Venezuelan people and the economy, and it gets crushed further, now we go into another cycle of a failed state under our control in Latin America with migration and all the other issues that come with it.
Amos, there's a big question about the next 6 months, the next year in Venezuela. There's also a question of what other regions of the world are next. Do you think that what happened in Venezuela with Nicolas Maduro really sets up action in Iran?
Yes. I'll take that back. I think that there is action in Iran was contemplated before and irrespective of Maduro. I think Prime Minister Netanyahu has wanted to do another round of strikes in Iran because the Iranians took the lesson from the June war, where both Israel, with some participation in the United States, attacked their nuclear sites, that as long as we don't do anything on nuclear, the Americans can live with what we're doing. And so they went back to rebuilding air defenses. They went back to rebuilding their missile production facilities, drone manufacturing facilities, and they thought that was okay. The Israelis have come in and asked last week or 10 days ago in Mar-a-Lago, asked President Trump for the green light to be able to go after the Iranians for their missile production. And now that's on the table. And so there are a lot of rumors that they got the green light. I don't know if that's true, but there's definitely preparation both in Israel and in the U.S. military at the moment of looking at designing what it looks like to have another round of strikes. And I think that the medium rate of the protests could become some kind of impetus or cover for these strikes. So I do think that sets it up. That being said, the Maduro capture certainly gives momentum to the argument of strikes in Iran.
It's one to watch. Amos, appreciate your time. As always, sir, thank you. The former White House senior advisor, Amos Hochstein. Let's give you an update on stories worldwide. Let's check back in with Yahara Anand for your Bloomberg brief. Hey, Yahara.
Hi, John. Denmark's prime minister saying NATO will collapse if the U.S. attacks Greenland. The warning coming as President Trump re-ups his desire to take over the island nation. Stephen Miller, a top aide to the president, telling CNN Greenland rightfully belonged to the U.S. and the Trump administration could seize it if it wanted. Meanwhile, AB InBev will reacquire a nearly 50% stake in its U.S. metal container plants from a consortium of institutional investors in a deal estimated to be around $3 billion. The metal container plant operations include 7 facilities across 6 states. Bloomberg Intelligence says the move to secure key packaging assets in the U.S. is likely as a result of aluminum tariffs. And shares of Philippine fast food chain Jollibee surging, the company planning to spin off its international business and list on a U.S. stock exchange. The company owns several brands, including stores that specialize in sweet-style spaghetti and crispy fried chicken. That's your Bloomberg Brief. John?
Italians everywhere.
Hold on a second. Yes. You think that that's Italian?
No, I'm saying they're all just shaking their heads.
Yeah, exactly. I was about to say that,
like,
you're saying, like, yes, Italian culture taking over.
No, not at all.
Sweet style spaghetti?
Not at all.
Is that something that you really...
Food crime. Food crime. Yahara, thank you. Up next, inflationary pressure.
Inflation continues to be an issue because you have fiscal stimulus, you have the effect of Fed easing, and you have the AI capital spending all going on at the same time that high-income households keep spending.
That conversation up next with Matt Hornbach of Morgan Stanley, live from New York. This is Bloomberg. Stocks are positive, just about up by not even 0.1% on the S&P 500. Positive now by 0.2 on the Nasdaq. Under surveillance this morning, inflationary pressure.
The inflation pressures that we had experienced have substantially diminished. They have not diminished enough to restore the Fed's 2% target. And I do think that were it not for the inflation concerns, the 10-year would be below 4 right now. Inflation continues to be an issue because you have fiscal stimulus, you have the effect of Fed easing, and you have the AI capital spending all going on at the same time that high-income households keep spending.
So here's the latest this morning. Traders are waiting a fresh read on inflation following a weaker than expected print to close out last year. Matt Hornbach of Morgan Stanley writing, payback from holiday-related weakness comes in January, so it is reasonable to expect a firm inflation reading early this year. Matt joins us now for more. Matt, good morning and Happy New Year.
Good morning. Happy New Year.
It's good to see you, sir. Let's talk about the last year. I think the most surprising thing last year was what didn't happen. And what didn't happen was immense tariff inflation pass-through. Have we escaped unscathed into 26?
Well, I do think if you pull out a microscope and you go deep into the inflation basket, you will see effects of tariffs in the numbers. That is undoubtedly true. I think the issue with last year was that the tariff factor just overwhelmed economists on Wall Street and sort of distracted from all the other things that were going on in the basket itself, which was predominantly more disinflation than inflation. And so net, what you ended up getting was a string of inflation reports that ended up surprising to the downside. Our view is that that continues. That doesn't mean that inflation won't pick up in the first quarter of this year. But it does suggest that if inflation continues to surprise to the downside, then this group of individuals on the FOMC who have staked out ground that they're not cutting because of inflation, you could easily see them change their tune if they're consistent in their reaction function.
Can you see ongoing disinflation with Fed rate cuts? In other words, will 2 or 3 rate cuts potentially alter the course of the disinflation you expect?
Well, this is where you have to bring in that famed long and variable lag with which monetary policy works. I don't think it's reasonable to expect that a 25 basis point rate cut in December is going to really affect the economy in the next 3 months. Most economists and market participants would rather look at financial conditions. Now, if you look at financial conditions, what you will see is that they have eased. They've been easy, actually, for quite some time. That has not stopped the labor market from continuing its slow and gradual weakening, which does raise questions about the effect of financial conditions on the economy today.
What if you have a jobless recovery, which is something that we see right now, continue, where you don't see the labor market recovery? You do see certain costs associated with the build out of AI continue to increase. Look at copper, look at aluminum, look at all of the precious metals. How do you square that with something that is both positive for bonds and positive for risk assets?
Well, it's called productivity in the end. And what we saw in the third quarter GDP report, not entirely yet because we don't have some of the underlying data that we would like, but the implication of that report was that productivity growth accelerated from the second quarter to the third quarter. And it had already accelerated from the first quarter to the second quarter. So if we are seeing this long lost productivity boom show up today, then what that hints at is a disinflationary style growth factor in the marketplace. And that's why I go back to inflation. If productivity is strong and unit labor costs continue to decelerate, which they have been, then we are going to see inflation continue to move back to the Fed's 2% goal.
That's the framework for the economy. Let's fold that into the bond market. How instructive is the spread between Fed funds and long rates? What does that tell you at the moment?
Yeah, well, it tells me that generally speaking, the curve is still pretty darn flat. Of course, there are parts of the curve that are steep, and the curve has been steepening over the course of the past year. But when you look at the level of yields further out the curve and the funds rate, arguably, it's still pretty darn flat. And so that has ultimately been one factor that has led us to believe that these rate cuts that we're forecasting for the next couple of meetings will continue to steepen out the yield curve. And that's been our big theme for the past year, is a steeper curve, much steeper than people expect.
But the bulk of the hard work's done at the front end of the curve, or do you expect some further leakage that Lisa and I were talking about earlier at the long end? Yeah,
so the bear steepening of the curve is something that occurs on any given day, but it does not occur over the course of time. We rarely see sustained bear steepenings of the yield curve. What tends to happen is on a given day, it might bear steepen, but over the course of time, you're actually getting a bull steepening of the curve. That's exactly what has happened since the end of 2023, is we've had a much steeper yield curve driven by two-year yields coming down alongside the Fed funds rate.
A sustained bear steepening could come about if there were some legitimate fiscal concerns that you couldn't bury with lower interest rates on a policy rate. Is that something on the radar?
Not for this year. In most years, you get investors that talk about supply. They get concerned about the deficit to GDP ratio or the debt to GDP ratio. Academics love to write about this topic, and yet they seem to always be...
Not just academics.
Wrong.
Well, sitting
Lisa's pretty academic.
Sitting right next to you. Well, no, I'm actually Google trending bond vigilante to see how far it's fallen off. Nobody cares anymore, but I care. I do care. I think that this is something that people are watching. I think it's going to be the term structure. That's what I think people will be watching.
Well, you're going to need some surprises on the supply front. You're going to need investor expectations, which are pretty set in stone at the moment, to change in a way that gets bond yields higher. We don't see that happening in 2026. Maybe in 2027, when we think the Treasury will have to increase coupon bond issuance, maybe you get concerns, but not for this year.
Matt, good to see you. As always, thank you, sir. Matt Hornbach of Morgan Stanley. Bramo, you've got to wait another year at least, apparently.
All I can say is I Google trended it, and it said not enough data to show.
There you go.
Which gives you quite the sense.
Might get a little surveillance spike now.
Exactly.
Might show up on the chart. Coming up on the programme, Liz Ann Sonders of Charles Schwab, Bloomberg's Ed Ludlow, Andrew Hollenhorst of Citi, plus Troy Gayeski of Future Standard. The third hour of Bloomberg Surveillance, up next.
We don't think the Fed will cut again under Chair Powell.
We think 3 cuts this year is the best guess.
We could continue to get strong growth like this. We might not see another rate cut through 2026.
The real weakness is likely to come in the second half of the year.
The economy will continue to grow through the end of the decade.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures on the S&P 500 adding to 2 days of gains. On the S&P, we're up by 0.06%. On the Nasdaq, up by 0.25%. The week gets a lot busier as it grows older. Tons of economic data through the week, building up to payrolls Friday. And during the week, little bit later today, in fact, later this morning, about 2 hours away, the agenda-setting meeting between the president and House Republicans. That's one to watch for the year ahead.
Oh, big time, because ultimately you don't only get potential insight about Venezuela, but you also get insight about the fiscal agenda at a time when there still is a government shutdown on the table. I mean, can you imagine that comes back? It's sort of like which bingo card do you have going at any given time? But also what they're planning to do about health care and what they're planning to do with tariffs, given the fact that affordability still is, or it was, front and focus.
Healthcare, tariffs, whether or not the Supreme Court is going to strike down IEPA, saying that's illegal. Housing, at one point there was talk about potentially having a mortgage that could be malleable and moved to open up the housing market. Affordability, according to Trump's top pollster, met with Republicans, and he said this is your number one issue ahead of the midterm elections. Now, of course, this is falling just days after the United States had this mission and had Maduro captive. So before they get all into that, they have to talk about Venezuela, because also they don't want an aggressive foreign policy to derail their message, which was this year supposed to be focused on domestic issues.
And it starts with tax refunds. Just how big are those tax refunds going to be, and how much is that going to change the trajectory for this economy this year?
Yeah, not only with respect to growth, but also inflation, right? I mean, if you have all the retailers saying that they're going to implement the tariff-adjusted price increases, and you have people with income to spend, at what point do you start to get that inflationary impulse? Look, everyone seems to be not including recession anywhere in their timelines in any capacity, which is the reason why every single analyst out there has a higher S&P target for the end of this year. Question is, what could potentially disrupt that? Does that concern anybody? And does that come with just that blind eye toward what's going on geopolitically?
The tax refunds, the one thing I will say is some people said that already consumers were using that money because they knew it was coming down the pipeline during the holiday spending. And second, if you have higher health care costs, do you really have that much more in your pocket if you already, that is a non-negotiable must spend for this year. So I think it'll be interesting to see how much it actually fuels this consumer.
10 a.m.?
10 a.m.?
About 2 hours away. That
Closed
so-called
door.
closed door meeting.
I don't know, maybe they open it up.
You know how leaky that meeting. I mean, the president, has he ever had a real closed door meeting? Ever?
I think he's had closed door meetings that we then found out about more than many other
You know, he loves having the camera in there. Come on. All right. Coming up this hour, Liz Ann Sonders of Charles Schwab with equities close to record highs. Bloomberg's Ed Ludlow joins us, breaking down comments from tech giants kicking off the CES conference in Las Vegas. And Andrew Hornbach of Citi expected a rise in unemployment as we look ahead to Friday's payrolls report. We begin this hour with stocks flat as markets search for direction. Liz Ann Sonders of Charles Schwab writing the following: the broadening out trade should have legs in 26, though not necessarily in a linear fashion. I'm pleased to say that in the studio is Liz Ann Sonders now. Liz Ann, good morning.
Good morning.
Good to see you.
Nice
Thanks
to
for being
see you
here.
all too.
How was the stage set for the 493 versus the 7?
So I think it's the trajectory of earnings that matters. I think one of the mistakes that investors often make is they'll look at data, comparative data, at a snapshot in time, and they'll compare level. So if you take the Mag 7 as a cohort and you look at earnings growth rate, even by the end of this year, it'll still be higher than the other 493. But directionally, it's heading down, and directionally, the other 493 is heading up. And that it brings up what I've said for my 40 years doing this, which is better or worse often matters more than good or bad. And I think that's one of the fundamental underpinnings for some of this broadening out.
So let's talk about the contribution of the Mag 7.
Yeah.
You detailed this in your recent note. They're the big contributors. Is that something you've got to mitigate as you look at the S&P 500 and how it's weighted for this year?
I think that one of the things that we find that mistakes that investors make is they conflate contribution with price performance. So they think generically of cohorts like the Magnificent Seven, and they're constantly barraged with they're the primary outperformers. They're among the biggest contributors, but they're not the price outperformers. So NVIDIA, the poster child for all of this, over the past year is the number one contributor to S&P returns by virtue of the multiplier of its cap size. But for calendar year 2025, it was ranked 75th in terms of price performance. So 74 stocks performing better than NVIDIA, number one contributor. I think it lends this impression to investors that the only way to do well, however you define that, is to be concentrated in those names. That's an institutional problem. If you're benchmarked against the cap-weighted S&P on a quarterly basis, you are at the mercy of the construction of the indexes. But that's not an individual investor problem. And what's also interesting, the best performers, we went kind of old school last year, SanDisk and Western Digital. I just bought my daughter for Christmas an actual digital camera because she likes the photo quality better, and unwrapped it, and there was, SanDisk on. And this is not a recommendation. I don't cover individual stocks.
It's just a story.
Get that disclosure out there.
That's
it's
very
just
good.
a story. Yep. But I just think that the opportunities are fairly ripe. And what was also interesting about last year, and we've talked about this before, is the churn and rotation under the surface. You had a very strong year for the S&P 500, but the average member had bear market level maximum drawdowns. It just happened on a rotational basis. I think that fed the opportunity for investors to look outside of that small concentration of mega cap names. And that's what I think has legs in 26.
A lot of people, when they ask, or when they're asked about the broadening out trade, start talking about U.S. versus the rest of the world. And they start saying, if you really want to diversify, go to Europe, go to Asia, go elsewhere. How much is that part of the proposition versus trying to identify the best stories?
Yeah, I think international diversification makes a lot of sense. We've been espousing that for a while. And suggesting to investors that they have international diversification for many years, you just had to constantly say, I'm sorry. And now to some degree, you get to say, you're welcome. So, clearly it worked in the last year. But you do tend to go through multi-year secular cycles. Not U.S. is the only game in town 100% of the time in a linear fashion and discard all the international. But I think that we're maybe in one of those waves where not necessarily that international is going to consistently outperform, but as a diversifier, it adds benefits.
How much is this driven by the rate cutting cycle and the idea of the dollar weakening? I mean, how much is that really the driving factor of outperformance?
I think that the dollar currency fluctuations is definitely a big part of it in terms of international. I think the interest rate side of things is a little bit more of a driver of why we saw bids down the cap spectrum. Now, all the way down into the unprofitable segment of small caps. I think that trade you want to fade. I think you want to lean into the profitable piece of small caps. So, but you're right to point both of those out as a driver of international and small caps, respectively.
We started this hour talking about this meeting the president's going to have at House GOP, how they sell the economy ahead of the midterms. You say the vibe-pression lives on. What are the contours of that kind of economy?
Well, it's the differential between the soft economic data and the hard economic data, and that's been with us now since the COVID era. It's kind of part of the K-shaped nature that we talk about. Confidence relative to actual spending. It's hard to see what breaks that divide between sort of dour expectations versus the reality on the ground. It probably only starts to converge as a function of, I think, the labor market, either more deterioration in the labor market that then has the hard data catching down to the soft data. But I think continued strength in the labor market, I think eventually could cause some of that soft economic data to catch up to the hard economic
Well, you
data.
also say that the labor market could be a tailwind or a headwind for 2026. How could it be both?
Well, it depends on what direction it goes. So there's so many facets of the labor market that have come into play, not least being the tie-in to immigration and the implications that has had for labor force growth and what that has meant for the unemployment rate and its trajectory looking quite unique in this cycle relative to past cycles. Normally, when the unemployment rate inflects and starts to move higher, it tends to consistently move higher. This flattish kind of trudging along unemployment rate is very unique in history. And I think that the labor market really holds the key, clearly holds the key to Fed policy. I think it holds the key to confidence and to spending. I think the tie-in, and maybe that sounds like I'm stating the obvious, but I think it's been more crucial in this environment. Annmarie, to your point about consumption patterns, and whether, in this case, what you mentioned before, front-running the expected gain from tax policy, or just confidence in the labor market that has allowed consumers to keep savings rate fairly low and continue to spend. It's because of that confidence in the labor market. So I'm not going to try to forecast what the jobs backdrop is going to look like, but I think that could move the needle very significantly on the economy.
Could it move and influence the equity market? Because what was curious last year is that we saw unemployment inflect higher and the equity market just kind of shrugged and carried on rallying. Is it important? Is it instructive for what happens with equities?
Well, last year was also a concentrated year and very much driven by the AI side of what was going on in the economy, the CapEx side. I continue to think that we've got, you mentioned earlier, no talk of recession. We've had plenty of recessions within the economy. It's just happened on a rolling basis. We're still arguably in a manufacturing recession to the extent you use, ISM manufacturing index as a proxy for that. We've just had pockets of strength that have been dominant elsewhere, that's been enough to prevent the economy from having an across-the-board kind of recession. But the rolling recession idea and rolling recoveries and rolling expansions, that's been with us since the quick aftermath of the COVID cycle. And I think that's something that will continue. So you have to peel a layer of the onion back a little bit to get a sense of truly what the economy is doing. It's not monolithic in this environment.
Lisanne, it's good to see you.
Good
it always
to see you
is.
guys too.
Thanks for dropping by. Looking forward to navigating the year ahead with you. Lisanne Sonders there of Charles Schwab. Let's get you an update on stories worldwide this morning with your Bloomberg brief. Let's cross over to Yahara for more. Hey, Yahara.
Hi, John. President Donald Trump says he wants U.S. oil companies to play a key role in rebuilding Venezuela. The president saying oil majors could be up and running in the country in less than 18 months, and the U.S. government could subsidize their efforts. Sources telling us here at Bloomberg that Energy Secretary Chris Wright plans to speak with oil executives in Miami this week. Meanwhile, copper is extending its rally above $13,000 as investors bet on a tighter market. Possible U.S. import curbs, rising demand, and production constraints are fueling bullish calls on the industrial metal. U.S. inventories of copper also surging with 44 straight days of net inflows in COMEX-tracked warehouses. And Manhattan home sales jumping 5% in the final quarter of 2025 compared to the year before. Sales getting a boost from an increase in co-op deals, a sign that falling borrowing costs entice some rate-sensitive buyers back to the market. Still, buyers who could pay in all cash dominated, accounting for 65% of deals. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for the update. Up next on the programme, the Morning Calls Plus, Bloomberg's Ed Ludlow, breaking down comments from the tech giants, kicking off the CES conference over in Las Vegas. That conversation just around the corner. Live from New York City this morning. Good morning.
What we think is going to happen in 2026 is you're going to go from the inflection year, 2025 for AI adoption, to the year where it accelerates when global corporates realize that if they don't find ways to drive revenues and cut costs through using AI, they will be at a competitive disadvantage.
That was Julian Emanuel of Evercore RSI looking ahead to the year ahead for 2026. Taking the temperature of things so far, Bramo, early days for this year, but just in look-ahead season, it's a bit odd this year, isn't it? There's not that overwhelmingly large consensus trade that people want to throw mud against. It just feels like a slow, choppy grind to nowhere, potentially.
What kind of conviction can anybody have on the macro backdrop right now? You have a lot of micro predictions, whether it comes to specific metals, specific tech companies, or specific parts of the industry. But other than that, it's not like someone's coming out saying, I see rates at zero and the small caps to the moon. It doesn't have that level of conviction.
That big, fat, directional trade.
Exactly.
A lot of skepticism out there at the moment still, even with those big price targets from certain banks. Equity futures on the S&P, positive by close to 0.1% within 0.5% of all-time highs on the S&P 500. On the Nasdaq, up by 0.24. That's some of the price action. Let's get you some morning calls. First up, JP Morgan upgrading Mobileye to neutral, seeing a higher predictability of growth outcomes in 26. That stock is up by close to 5%. Your second call from Truist initiating coverage of Core Week with a hold rating, believing it is a leader in providing AI cloud infrastructure. That stock is up by 2.7%. And finally, Evercore reiterating an outperform rating on NVIDIA with a street high price target, naming it a top pick for 26. That stock is up by 0.8%. Sticking with tech, the AI race heating up over at CES.
The amount of computation necessary for AI is skyrocketing. The demand for NVIDIA GPUs is skyrocketing. The race is on for AI. Everybody's trying to get to the next level.
With all of that user growth, we have seen a huge surge in demand in the global compute infrastructure. We don't have nearly enough compute for everything that we can possibly do.
Programming note, don't miss AMD CEO Lisa Su right here on Bloomberg TV at 11 a.m. Eastern Time, speaking with Bloomberg's Ed Ludlow. Plus, at 1 p.m., he'll be catching up with the CEOs of NVIDIA and Siemens. Ed, I'm pleased to say, joins us now for more. Ed, looking forward to this. Your day is absolutely stacked, my friend. What's on the top of the agenda for you and the team?
Yeah, I mean, it's a lot of fighting talk from both Jensen and Lisa, right? But it's the same questions. You know, what is the real quantifiable demand for this year? Do they expect the capital expenditures of the hyperscalers that are the bulk of their business to increase? And then, you know, what's kind of interesting, John, I heard what you were saying about the direction of trade. You know, I appreciate NVIDIA and AMD are both up a few tenths of a percent in the pre-market. But during those keynotes last night, particularly NVIDIA, the market really struggled for direction because it didn't really understand what the main headline was for 2026. Because we came to Vegas thinking, all right, this is the first official working day of the year. You have the CEO of the world's biggest company and most important company probably going to tell us something. And in reality, he didn't, beyond the broad strokes of, the AI story that he's been telling for the last couple of years is still intact.
In many ways, Ed, I think for some investors, they feel like the risk factors are elsewhere. After getting punched in the face by DeepSeek around this time last year, the focus also on the likes of OpenAI. And something that's come up repeatedly in my early conversations for the year are the funding needs of OpenAI, setting the tone for the whole trade. Ed, are you hearing the same thing?
Yes, and OpenAI continues to consider how it can raise more capital. Actually, during the AMD keynote last night, Greg Brockman, the president, went on stage with Lisa Su and continued to talk about how OpenAI is also compute constrained. They don't have the capacity they need, and that is the story that they're using to convince the private markets. We must raise this capital because we need it to buy the chips, and or at least in some mechanism install more data center capacity. To your point, particularly on the NVIDIA side, there was a news headline which was sort of a little tepid for the markets, but them confirming that Vera Rubin, which is their next generation platform, is in full production. It's a repetition of what they said in August and then again in November, but it does give the market some confidence because the main reason we care why NVIDIA or AMD can bring out a new generation of GPU or system every year is that every year it lowers the cost of running AI models, which if you are OpenAI or Microsoft, who are going to be some of the first users of it, is critically important if the market's going to believe that the economics of all of this will work out. You can't go on investing for years and years without showing a return. In short, a high-performance compute system like Vera Rubin is able to generate tokens at a tenth of the cost that Blackwell can. And that does change the economics behind using AI models at scale.
Ed, I love the way you connected these two stories, the worries about the financing needs of OpenAI and the push to greater efficiency and reducing the cost of using some of the compute. I wonder how much NVIDIA's push into more efficiency highlights how much it's a rival with Google and how much Google has really made inroads in a material way.
Yeah, I don't want to give it away to either Jensen or Lisa. It's a question we probably should ask. What they will say and have said is that the Google TPU story is it's a great product that's kind of a bit niche. And both NVIDIA and AMD would say the thing that's so good about our technology is it's versatile. It can be used at scale. It's easy for engineers to use in combination with software. And the market hasn't bought that either. Every time Bloomberg's reported a big deal with TPUs, you see NVIDIA and AMD stock fall pretty significantly. So, to your point, I think that Jensen was trying to convince people on stage that, NVIDIA is basically moving faster and has the scale that wards off that competition. But it still lingers that basically if companies are so compute constrained, of course they're going to look for other options. And there will come a time where they'll look and say, what is the most economically viable option for me?
You know, you talk about how we didn't hear anything new, but Annmarie and I were just thinking the same thing, which is we did hear about a smart car, reasoning cars, the Abramowicz, that could potentially create a new scenario where your car tells you that you're just wrong and stop backseat driving. I mean, at a certain point, Ed, why isn't that a bigger story here?
Yeah, you know the video that you're showing, by the way, it's a great video. It's a Mercedes CLA vehicle, and it's running on completely NVIDIA hardware and NVIDIA software. And what's so interesting about it is that on stage, Jensen claimed this was a first. It's the first automotive or autonomous driving model that does reasoning. But you've just seen it go past Chestnut Street in San Francisco, and it will proceed down and take a left on Broadway. That's the same route that I drive every single day using Tesla's full self-driving, which is exactly the same thing. And so what was interesting is when NVIDIA released that piece of information, Elon Musk ended up engaging about it on X because he made the point like, hey, we kind of already do that. And I find that very interesting because NVIDIA and Tesla, along with Elon Musk's other companies, are kind of core partners. NVIDIA is very committed to the next phase of AI, which is autonomous driving and robotics. But I thought it was interesting that their claim was, we've done something new here, which was instantly met by pushback, albeit from those that are kind of hardcore Tesla supporters.
I saw the Elon Musk tweet. He had an emoji that was laughing, and he says, we're already doing this, and it's easy to get to 99% and then super hard to solve the long tail of the distribution. Is NVIDIA basically now in competition with Tesla?
It's the question. If I get the opportunity, I hope to ask. One thing I'd say, you know, detail matters. In the press release, frankly, this is a level 2 system. It's an advanced driver assistance system, not full autonomy. And the way that NVIDIA and Mercedes packaged it was as a full autonomous system. It may well be one day, but at the end of the day, the principal technology differences are really important. And investors do understand this, right? Tesla uses only cameras. It does not use LiDAR, radar, ultrasonics, or other sensors. And its argument for that is that at scale, it is the most viable, economically speaking. You know, it's cheap, whereas all those sensors cost a lot of money. And so, you know, on stage, Jensen was talking about the idea that there's this very sophisticated compute system that NVIDIA is providing to Mercedes, goes in the car, has all these sensors. That's a lot of money when you buy a vehicle.
Just quickly, I've got 15 seconds since we're talking about it. When's the new Rivian out?
Yeah, the Rivian maybe by the first half of this year, beginning of the second half of this year. We'll see.
Pretty cool. Looks pretty cool. Mid-size SUV, you seen that?
I actually think that the Rivians are really quite good looking.
New one coming out this year. Looks very, very cool.
I would agree with that.
You're in the market?
Might be in the market.
Okay, I thought so. The way you asked that, it was like you were planning your
year. A personal
so.
question, all right? Give me a break. Don't miss that conversation later. AMD CEO Lisa Su right here at Bloomberg TV, 11 a.m. Eastern Time with Bloomberg's Ed Ludlow on Bloomberg Technology. Later on, the NVIDIA boss, Jensen Huang, at 1:15 Eastern Time. Ed Ludlow there, over at CES in Las Vegas. Coming up on the program, we'll catch up with Andrew Hornbach of Citi, expecting a rise in unemployment. Looking ahead to Friday's payrolls report, plus Danny has some morning movers. Microchip shares rising after strong third quarter sales. 60 minutes away from the opening bell, equities just about unchanged on the S&P 500. On the Nasdaq, pushing higher in yesterday's session, snapping a 5-day slide. Up again this morning by close to 0.2%. Let's get you some morning movers. Danny Berger has more. Hey, Danny.
Hey, John. Shares of Microchip gaining in the pre-market trade, up nearly 4%. Pre-announcing their earnings yesterday, the semiconductor company seeing an upgrade to their outlook, also rhyming with what we heard from AMD's Lisa Su, that there is just off-the-charts demand for anything AI-related and chips and semiconductors. So again, Microchip gaining in the pre-market session. Elsewhere in tech, Ava, it's a micro-cap company, so just take that big move with a grain of salt. Up a quarter this morning, 25.3% after NVIDIA's announcement at CES that they will be moving into autonomous vehicles. They're going to be using Ava's LiDAR technology to power their future vehicles. So again, those shares gaining. Finally, Equifax, TransUnion, the credit reporting bureaus down sharply this morning. The Federal Housing Finance Agency Director Bill Pulte writing on X, saying that he doesn't understand the pricing of these credit unions and that they are inviting scrutiny day by day. Equifax down 2.8%, as is TransUnion, John.
Danny, thank you. Looking forward to the program. With Danny Berger and Matt Miller in about 30 minutes' time to guide you into the opening bell at 9:30 Eastern Time. Bit of an update on the President's get-together with House Republicans down in Washington, D.C., set to take place in about 90 minutes' time. Doesn't sound very closed-door-ish anymore, does it?
So the whole retreat is all day, and that's supposed to be closed door. But I guess his remarks at 10 a.m. are going to be televised because Caroline Leavitt, the press secretary, says, tune in. You don't want to miss it.
And then they'd retreat. Then it's closed doors.
Yeah, I'm guessing.
Okay, all right.
I mean, I guess that can change too. I guess maybe they could televise the whole thing.
Everything that's talked about is going to be leaked.
Yes.
Okay, look out for that later down in the nation's capital. Let's turn to the Federal Reserve. The new year means a new set of voters on the FOMC. Mike McKee's tracking that for us. Good morning, Michael. A bit of a hawkish tilt this year, right?
Bit of a hawkish tilt this year. We don't need leaks from the Fed because they pretty much tell us what they're thinking. We do have 4 new voters from the regional banks rotating onto the voting schedule, and they're pretty much all hawks with the exception of perhaps Anna Paulson. Beth Hammack, Neil Kashkari, and Lori Logan have made it clear they don't think that we really need to cut rates in January, and we're only at a 16% chance of that, maybe because markets are looking at who is going to be voting this year. Paulson speaking a few days ago saying that she thinks it's a finely balanced situation. One person who is not a voter this year, will be next year, but is making his views known this morning, Tom Barkin from Richmond, and he's also in that finely balanced camp where he's not taking a position either way. He's somewhat optimistic, saying in a speech just now that 2025's uncertainty is bound to diminish. The fog should lift, and as firms build confidence in demand and the policy environment, that should be good for hiring and investment. Then he adds, but going forward, policy will require finely tuned judgments, balancing progress on each side of our mandate. So the question is, does the Barkin scenario come true or not? Neil Kashkari yesterday on CNBC saying he thinks they're pretty close to neutral right now, so he's not expecting a whole lot. It'll all come down to what the data tell us, the jobs report and CPI. And I note this morning that we're a little more optimistic on the jobs front. Yesterday we were talking about an estimate of 59,000 jobs created in December. Now we're up to 65,000.
Big range, Mike. 155 is the high, the low's 23. We can get into payrolls a little bit later. Let's just stick on the committee on the FOMC. Mike, you've tracked this committee, this institution for decades. Do you sense we're breaking out into a new regime? And I'm sure you've heard some of the conversations we've had on this programme. There's a sense from some people that are appearing on the show that the president's push for interest rates is leading to some unintended consequences. It's galvanising every single voter on the committee. And maybe this more dovish core at the FOMC is going to be a less effective dovish core because of the pushback you'll get as a consequence.
Well, in the meantime, is what I would say, with the Fed and everybody else waiting for the end of Jay Powell's chairmanship. We'll have to see what develops from there. But I think the real thing that people are forgetting is we haven't had a situation where interest rates were this high and it was this questionable about whether you cut or whether you hold as a decision. And so now you're getting more different views than you normally do when either it's going to be just a hold or just a cut or just a raise. So it looks like there's more division, but I don't think it suggests a new regime at all.
Mike McKee, thank you, sir, with the latest on what's going to happen with the Federal Reserve and the data later this week, and the latest on this committee and how things change with new leadership later this year.
Well, that's, I think, the key, right? So right now, it might be that this is a divided Fed because ultimately the data is a Rorschach test in terms of how you interpret it. Later this year, it might be more divided for other reasons when we actually get a decision about the Kevins. Or Scott Bessent if he wants an exit strategy.
Yeah. Andrew Hollenhorst of Citi's got things to say on the data and on that too. In our base case, the unemployment rate rises to 4.7% in the December jobs report, continuing its trend higher and keeping the Fed reducing policy interest rates. Andrew joins us now for more. Andrew, good morning.
Good morning.
Good to see you.
Happy New Year.
Yeah, Happy New Year to you too. That's not such a happy New Year for the labour market, though. The drift towards 5 continues.
We think so, and I think that we're in the business of forecasting these things on a monthly basis. There's a lot of volatility. We have some residual seasonality in the data. All of those things kind of obscure what's going on. But if you just step back and look at what this labor market has done over the last 2 years, we've been trending higher in the unemployment rate. We've just been consistently trending higher in the unemployment rate. So we think that trend continues this year. We do think that can happen in the jobs report that we're going to get this week with the participation rate coming up a little bit. Maybe that's going to push the unemployment rate higher. But what I would really emphasize is that broad trend towards loosening in the job market.
Mike talked about the hawkish tilt as the FOMC rotates and you get the regional voters, the new ones coming on board for a year. What is the credible case to stay on hold? What is their case at the moment?
So I think it's all about how comfortable are you with the labor market, and then how much discomfort do you have about inflation, and then to some extent financial conditions also, because financial conditions are easy. They've been easy for some time. And then on inflation, and this is where I think people really differ, we're above target on inflation. If you listen to Chair Powell, he'll say 2.8% or so core PCE inflation. But go ahead and subtract about 50 basis points from that due to tariffs. You're down at 2.3%. So I think there's a core of more dovish Fed officials that are looking through that tariff inflation and are not that concerned about inflation. But there's a group that are still concerned about inflation. So it's going to be the jobs data that matter in terms of, are we becoming a little bit more uncomfortable with the job market, this very low hiring job market? And then on the inflation data, and that could take a number of months, but we have a clear slowing trend in shelter prices. I do think that some of those concerns about inflation will dissipate over the course of this year. But they may rise first before they dissipate later this year.
One thing that Richmond Fed President Tom Barkin talked about was that this is going to be clean data, and that he's looking forward to getting some clean data. How much do you actually think this data will be the first clean read since the government shutdown?
So I think on the jobs report and on the unemployment rate, this is really important in terms of the interpretation. A lot of people looked at that November unemployment rate and said, yeah, 4.6%, but maybe it got boosted because of the government shutdown. So even if we hold steady at 4.6% on the unemployment rate in the data for December, I think people will look at that and say, well, that was a clean 4.6%. And we've heard different Fed officials differ in terms of how clean or not they think that number is. So yes, I do think that, especially on the inflation data, I think there are big questions about the inflation data during the shutdown period. But on the jobs data also, there are some lingering questions. This jobs report will help to resolve those.
And you think that it's going to resolve it in terms of possibly even getting a Fed rate cut by the end of this month? And I just wonder how far that will go to bolstering a labor market that's being affected by other issues outside of any kind of monetary policy.
Yeah, not very far, right? So that's you're cutting interest rates 25 basis points and doing it in this month versus doing it later this year. That's just not going to have a huge effect on the macroeconomy. But I think you're still watching the labor market because you're looking at three things. If the labor market is loosening, it's telling you maybe you're not really at neutral. Maybe you need to cut a little bit further. It's telling you there's going to be less inflationary pressure because we don't have this wage pressure. We don't have a tight labor market. And it's also telling you that maybe I want to start thinking about insurance. This is not something we're really hearing from Fed officials now, but maybe I want to think about, do I need to be at least at the bottom of the range of neutral? Maybe I'm going to need to go below neutral because if you're actually getting to 5% unemployment. And I think it's a very obvious point, but one that's being missed a little bit in some of the rhetoric around this. The unemployment rate is moving higher gradually. It's good that it's a gradual move and not a sharp move. But if we just keep moving gradually higher, we will hit 5%. And you'll keep going north of 5%. And at some point, we'll say, we really have an issue with unemployment in this country.
Andrew, when it comes to inflation, what about healthcare inflation, given the fact that subsidies are rising?
Yeah, so we have this really complex technical issue now with the way that these healthcare subsidies are going to change as we go into 2026. That could have some direct effect on the CPI data. We don't think it's going to have much of an effect on the PCE inflation data. But in terms of just consumer costs, right, this is a higher cost that consumers will be facing. But I don't think it will have a big effect on the reported numbers.
So when it comes to inflation, what is the biggest concern then in terms of policy? Because everyone will talk about tariffs, but this year is also healthcare. Do you think any of these will have an impact?
I think what I would be watching in the inflation data are two things. One is, do we see this continued gradual softening of services inflation? We're seeing it most clearly in shelter. We're not seeing it as clearly in non-shelter services. So that's one question. The other question is, I was mentioning earlier, Powell talking about this 50 basis points due to tariffs. Well, is that strength that you have in goods prices, is it really tariff related, or are there other factors that are playing into higher goods prices? Is that going to continue or is that going to dissipate? I don't know if policy can do a lot to address those things. And when people talk about affordability, honestly, I think a lot of what they're talking about is the expense of buying a house, which has to do with mortgage rates, and that, well, the Fed cutting interest rates will bring that down.
And also, Andrew, things are just bloody expensive.
Everything's expensive.
Jim Bianco sounded so English then, didn't it? Jim Bianco did a great job of this over at Bianco Research. Yeah. The Fed talks about one-offs and one-time changes because they're focused on the change. The public is dealing with the price level.
That's right.
And where prices are is just ridiculous. Anyone trying to buy food or pay the energy bill, it is absolutely ridiculous. Do you think the Fed needs to reconcile the differences between how they look at inflation and how the public experiences it?
I think certainly in how they talk about that, it's very important to kind of get the rhetoric right around that, because it is true. I mean, I experienced that. You go to the store and you're just shocked at how much everything costs. And I'm an economist. I understand inflation. I understand price level. But I still have that emotional experience of going to the store and realizing how expensive everything is. So, yes, the price level is higher. And I think that is something that should be communicated more clearly, is that the path forward, it's going to be difficult to bring that price level down, right? We're not trying to generate deflation. Now, what you would hope is that wages continue to grow, right? And we end up having real growth in real wage growth. And we are having some of that now, which is a healthy thing. But honestly, you need years of that for people to feel better about these prices.
Quick one to finish. The new Fed chair. Is his name Kevin?
I think there's a high probability that his name will be Kevin, and I think that's about all we can say right now.
Helpful. Andrew, thank you. Thank you very much. Good to see you. Thank you. And well done last year, by the way. I think one of the more accurate forecasters of the Federal Reserve, Andrew Hollenhorst there of Citi Research. Let's give you an update on stories worldwide this morning with your Bloomberg Brief. Here's Yahara with more. Hey, Yahara.
Hi, John. European leaders and U.S. officials aiming to finalize an agreement on security guarantees that include the possibility of American boots on the ground in post-war Ukraine. The talks in Paris will focus on how to integrate capabilities recently proposed by Washington, with plans drawn up by the so-called coalition of the willing that's made up of Ukraine's allies. Meanwhile, Denmark's prime minister saying NATO will collapse if the U.S. attacks Greenland. The warning coming as President Trump re-ups his desire to take over the island nation. Stephen Miller, a top aide to the president, telling CNN Greenland rightfully belonged to the U.S. and the Trump administration could seize it if it wanted. And Amazon unveiling a new line of artwork-style TVs. The Ember Art line is designed to resemble a piece of framed art and will come in 10 different colors. It will be available starting this spring in 55 and 65-inch sizes. The line starts at $899 for the smaller version. And as for your question, John, on whether it will require a separate connection box, well, current details suggest it won't, but we'll have to wait on Amazon to release full details on installation.
There you go. That's the game changer. If there's no box there. Yahara, thank you. Appreciate it.
You're looking at Rivians and you're looking at box art. Really? I mean, this is like, who is this person?
Just to like streamline the living room a little bit,
it's true. I get it. I totally get it. And you need to implement it correctly. Are you going to buy a licensing agreement to get different artwork?
No. I'm sure you can just upload your own photos, can't you?
That would be actually much better.
Wouldn't that make sense?
I guess.
We'll find out right here on Bloomberg. OK. Up next, we'll set you up for day ahead. Plus, Troy Gayeski of Future Standard breaking down opportunities in private equity and markets worldwide. You're watching Bloomberg TV.
We still see technicals and momentum in the driver's seat. You almost have to remove the macro from your brain right now coming into the new year. We're still watching, some of this macro weakness. The business surveys are telling you things aren't great. But meanwhile, the markets are saying, get ready. We're going to see a massive cyclical expansion. The economy is going to accelerate meaningfully this year. So there's a major disconnect right now between macro and markets.
How does that disconnect reconcile, if at all, later this year? There was a conversation with Emily Roland of John Hancock a little bit earlier on. You can catch that conversation when we upload the full programme to YouTube or on the Bloomberg terminal for that matter. As we count you down to the opening bell, about 43 minutes away, the price action looks like this. Equity futures on the S&P just about unchanged. The Nasdaq 100 positive by 0.1%. The day ahead, and the week ahead for that matter, looks like this at 9:45 Eastern Time. US S&P PMIs, 10 a.m. Eastern Time. President Trump giving remarks at the House GOP retreat, setting the agenda for the year ahead, going into the midterms. Tomorrow, lots of data, ADP, JOLTS, and ISM services. Thursday, another round of jobless claims. Friday, the payrolls report just around the corner. Let's talk about this market. Troy Gayeski of Future Standard writing, in an environment where public equity valuations are stretched and it's very difficult to find growth outside of mega cap tech, middle market private equity stands out as an oasis. Troy joins us now for more. Troy, good morning and Happy New Year.
Good morning, John.
Good to see you in the studio. Thanks for coming in, buddy. Thank you. Let's talk about setting the tone for markets worldwide, and in private markets for that matter. Yeah. To what extent does the fate of one company, and I'm going to say it, OpenAI, that one company set the tone for the broader market?
Well, as we were discussing before, OpenAI has been at the cutting edge of obviously infrastructure for the complex, right? And that has driven competitive pressure for the hyperscalers, who are historically petrified of losing market share in various areas, to spend money at prodigious rates, right? The fact that 30, 40, 50, maybe even 60 basis points of contribution to nominal GDP will come this year. So they've been critically important in waking up the giants, so to speak. On a go-forward basis, though, the hyperscalers are going to drive more and more of the outcomes, we believe.
What I'm getting at really is the fate of the public market. How tied is it to what is happening in private markets and vice versa?
Yeah, so their private markets tend to have an advantage for funding early. As you know, if you look back, 15, 20 years, it was all about small scale funding and then eventually going public, and that allowed you to grow. As private equity and private credit has grown up, they've been the preferred sources of financing. And then prior to that, of course, in growth areas, you have venture capital. So private credit infrastructure has led the way in terms of financing these projects. And then now, of course, you have a little more circular funding coming, again, from the largest 5 companies in the world.
There is this question, though, and I think that just to build on what John is saying, OpenAI and their investment has really fueled a lot of other investment in infrastructure, in data centers, has propped up the valuations of it at a time when suddenly people are looking for more efficiency. At what point does that pose a significant risk on a credit perspective to private credit and infrastructure investments this year?
Well, so I think big picture, right, if you're looking at the ROICs that at least are modeled out in data centers, and to be fair, remember the demand for compute, not just in AI, but obviously almost more importantly in old school, SAS or other applications, continues to outstrip demand, right? So you have tremendous demand for the computational power of the storage, and you don't have enough supply yet. So trying to extrapolate in the near term that some struggle at OpenAI would lead to some circular backwash is hard. We could see 27 and 28. By then, if there's not an AI ROIC, it's going to get a little bit tricky in terms of forward CapEx budgets.
Do you think that data centers are a good place to keep investing in? Or do you think that there needs to be a catch-up trade with some of the energy sector as well from a private investment perspective?
So look, all the analysis our team does, and we're a much smaller player, roughly $2 billion in assets, is that forward demand, particularly in situations that are funded by hyperscalers, where you have that recurring revenue, that free cash flow, look very attractive. The comparison I always use is if you look at senior secured commercial real estate lending versus the senior part of the capital structure in data centers, you get an extra 50 to 70 basis points to pick up in hospitality, for instance. However, once you move down into mezz and equity, given where we are in a real estate cycle, you arguably have more upside the next several years in the digital space.
But to Lisa's point, is there a mismatch potentially for the energy that is needed to run these data centers that could potentially hold the story back?
Well, it's a great point. So I think big picture, this is back to demand outstripping supply, right? So when we look at one of the risks to GDP growth this year, it's less about on the demand side and more about, can you actually construct enough, right? Do you have enough copper? Do you have the political will? I mean, the other day, Bernie Sanders and Ron DeSantis agreeing on constraining, how often do you see that, right? So there are more challenges on the supply side, less challenges in the near term on the demand side. And so that tends to bode well for investments, at least over the short to intermediate term.
Do you think that's going to enforce discipline on these players and stop them from spending loads? I think Michael Semblis of JP Morgan Asset Management talked about this recently. I've got copper through 13K. The electricity needs that Lisa talked about, the social pushback as well, that so-called gating. How much of a disciplinary effect will that have on these spenders?
Well, as of now, given the size of the budgets, it looks like the spending side is set. Again, it's more on the supply side. So I wouldn't expect until 27, 28. Remember, the key factor here is when will the ROIC for AI really show up in the real economy? Not in search, not in Gemini, et cetera, but in the real economy. Everyone, for the time being, is willing to spend.
When you said the real economy, what do you mean? Just explain that.
Well, so one of our kind of small trades in our multi-strategy fund, for instance, is trying to find players in broader industries, medicine, chemicals, energy, infrastructure, et cetera, where you can actually use these tools to meaningfully produce or boost productivity growth. That's starting to show evidence, but it's unclear if it's enough to drive the continued growth of spending, right? And so what I'm talking about here is you think of a flatlining in spending, call it 27, 28. That will be fine for broader markets. We'll have a multiple correction, multiple compression, hyperscaler multiples will come down, but it'll be very, very challenging, if not catastrophic, for hardware. So, when you step back, whether it's public markets or private markets, I think the key in your portfolio is to have enough exposure to the AI trend that it can move the needle, but not so much that it causes significant damage if it peters out.
We can turn to the debt markets. Just seen this headline cross on a Bloomberg terminal. Broadcom, 4-part debt offering coming from that company, Lisa, just crossed on a terminal moments ago.
Yeah, and I wonder how much of it's going to be a 50-year tranche, considering what we saw from some previous ones. It is interesting to see all the debt that is coming to market and the fact that it has been received so well. It has been in the public markets, now following on to the private market financing. They do have a 30-year tranche. I don't see a 50-year tranche, but who's next, right? This isn't over.
It's a new story, isn't it? It's a new shift. There's a different character to all of this, and I think it started coming out of summer. We moved away from using cash flow and we started to move to the debt story. I'm not talking about Broadcom, I'm talking about what's happening with the Oracles of this world towards the end of last year.
Yeah, and it is a different proposition for the Oracles of the world, which doesn't have profit. But when you have a Google or Amazon, it's a very different story. I think that it was Torsten Slok who said that in 2024, 7% of total investment grade issuance came from the tech sector. It was 14% last year, and it came just in a couple of months, all at once.
Amazing. Troy, do you miss talking about Bitcoin and public equities? Do you miss any of that?
Not really.
No. Just asking.
No. And on that topic, if I may, to
just quickly, sure.
to private equity. So,
of course, yeah. Why not?
Why not, right? So if you think of the AI, one of the nice things you can find are other sectors with tremendous growth. In healthcare, and it's not because of my engineering background, we're very excited about robotic surgery, infusion care, not maybe as juicy as AI has been the last 2 to 3 years, but very good upside and limited downside.
Well done for squeezing in that extra trade. Troy, thank you. Troy Gayeski of Future Standard. Coming up tomorrow, Cameron Dawson of New Edge Wealth, George Saravelos of Deutsche Bank, Gaki Chowdhury of BlackRock, and Keith Lerner of Truist from New York City this morning. Good morning. Have a wonderful day. This was Bloomberg Surveillance.